reconstruction or erection of such facility or property includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52. B. Applicable facilities. The term qualified facility shall not include any applicable facility, as defined in subsection E4B, for which construction begins after June 16, 2025, if the construction of such facility includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52. And B. In subsection C, by adding at the end the following new paragraph. 3. Material assistance from prohibited foreign entities. The term energy storage technology shall not include any property, the construction of which begins after December 31st, 2025, if the construction of such property includes any material assistance from a prohibited foreign entity, as defined in Section 7701A52. 2. Additional restrictions. Section 48ED is amended by adding at the end the following new paragraph. 6. Restrictions relating to prohibited foreign entities. A. In general, no credit shall be determined under subsection A for any taxable year if the taxpayer is 1. A specified foreign entity, as defined in Section 77A 51B, or 2. A foreign influenced entity, as defined in Section 7701A 51D, without regard to Clause 1-2 thereof. B. Effective control. In the case of a taxpayer for which Section 7701A 51D12 is determined to apply for any taxable year, no credit shall be determined under subsection A for such taxable year if such determination relates to a qualified facility described in subsection B3 or energy storage technology described in subsection C2. Recapture. A. In general, Section 50A is amended. 1. By redesignating paragraphs 4 through 6 as paragraphs 5 through 7, respectively. 2. By inserting after paragraph 3 the following new paragraph. 4. Payments to prohibited foreign entities. A. In general, if there is an applicable payment made by a specified taxpayer before the close of the 10-year period beginning on the date such taxpayer placed in service investment credit property, which is eligible for the Clean Electricity Investment Credit under Section 48EA, then the tax under this chapter for the taxable year in which such applicable payment occurs shall be increased by 100% of the aggregate decrease in the credits allowed under Section 38 for all prior taxable years, which would have resulted solely from reducing to zero any credit determined under Section 46, which is attributable to the Clean Electricity Investment Credit under Section 48EA with respect to such property. B. Applicable payment. For purposes of this paragraph, the term applicable payment means, with respect to any taxable year, a payment or payments described in Section 7701A 51D12. C. Specified taxpayer. For purposes of this paragraph, the term specified taxpayer means any taxpayer who has been allowed a credit under Section 48EA for any taxable year beginning after the date, which is 2 years after the date of enactment of this paragraph. 3. In paragraph 5, as redesignated by Clause 1, by striking or any applicable transaction to which paragraph 3A applies, and inserting any applicable transaction to which paragraph 3A applies, or any applicable payment to which paragraph 4A applies. And 4. In paragraph 7, as redesignated by Clause 1, by striking or 3 and inserting 3 or 4. B. Conforming amendments. 1. Section 1371D1 is amended by striking Section 50A5 and inserting Section 50A6. 2. Section 6418G3 is amended by striking subsection A5, each place it appears, and inserting subsection A7. C. Denial of credit for expenditures for certain wind and solar leasing agreements. 1. In general, Section 48E is amended A by redesignating subsection 1 as subsection J, and B by inserting after subsection H the following new subsection. 1. Denial of credit for expenditures for wind and solar leasing agreements. No credit shall be determined under this section for any qualified investment during the taxable year with respect to property described in paragraph 1 or 4 of Section 25DD as applied by substituting lessee for taxpayer if the taxpayer rents or leases such property to a third party during such taxable year. 2. Conforming rules. Section 50 is amended by adding at the end the following new subsection. E. Rules for geothermal heat pumps. For purposes of this section and Section 168, the ownership of energy property described in Section 48A3A7 shall be determined without regard to whether such property is readily usable by a person other than the lessee or service recipient. D. Domestic content rules. Subparagraph B of Section 48EA3 is amended to read as follows. B. Domestic content. Rules similar similar to the rules of Section 48A12 shall apply, except that, for purposes of subparagraph B of such section and the application of rules similar to the rules of Section 45B9B, the adjusted percentage, as determined under Section 45B9C, shall be determined as follows. 1. In the case of any qualified investment with respect to any qualified facility, the construction of which begins before June 16, 2025, 40%, or in the case of a qualified facility which is an offshore wind facility, 20%. 2. In the case of any qualified investment with respect to any qualified facility, the construction of which begins on or after June 16, 2025, and before January 1, 2026, 45%, or in the case of a qualified facility which is an offshore wind facility, 27.5%. 3. In the case of any qualified investment with respect to any qualified facility, the construction of which begins during calendar year 2026, 50%, or in the case of a qualified facility, which is an offshore wind facility, 35%. 4. In the case of any qualified investment with respect to any qualified facility, the construction of which begins after December 31st, 2026, 55%. E. Elimination of energy credit for certain energy property. Section 48A2 is amended, 1. In subparagraph A2 by striking 2% and inserting 0%, and 2. By adding at the end of the following new subparagraph, C. Non-application of increases to energy percentage. For purposes of energy property described in subparagraph A2, the energy percentage applicable to such property pursuant to such subparagraph shall not be increased or otherwise adjusted by any provision of this section. F. Application of clean electricity investment credit to qualified fuel cell property. Section 48E, as amended by subsection C, is amended, 1. By redesignating subsection J as subsection K, and 2. By inserting after subsection I the following new subsection. J. Application to qualified fuel cell property. For purposes of this section, in the case of any qualified fuel cell property, as defined in Section 48C1, as applied without regard to subparagraph E thereof, 1. Subsection B3A shall be applied without regard to clause 3 thereof. 2. For purposes of subsection A1, the applicable percentage shall be 30%, and such percentage shall not be increased or otherwise adjusted by any other provision of this section. And 3. Subsection G shall not apply. G. Effective dates. 1. In general, except as provided in paragraphs 2, 3, 4, and 5, the amendments made by this section shall apply to taxable years beginning after the date of enactment of this Act. 2. Domestic content rules. The amendment made by subsection D shall apply on or after June 16, 2025. 3. Elimination of energy credit for certain energy property. The amendments made by subsection E shall apply to property the construction of which begins on or after June 16, 2025. 4. Application of clean electricity investment credit to qualified fuel cell property. The amendments made by subsection F shall apply to property the construction of which begins after December 31st, 2025. 5. Termination for wind and solar facilities. The amendments made by subsection A shall apply to facilities the construction of which begins after the date of enactment of this Act. Section 7514, phase out and restrictions on advanced manufacturing production credit. A. Modification of provision relating to sales of integrated components. Paragraph 4 of Section 45XD is amended to read as follows. 4. Sale of integrated components. A. In general, for purposes of this section, a person shall be treated as having sold an eligible component to an unrelated person if 1. Such component, referred to in this paragraph as the primary component, is integrated, incorporated, or assembled into another eligible component, referred to in this paragraph as the secondary component, produced within the same manufacturing facility as the primary component, and 2. The secondary component is sold to an unrelated person. B. Additional requirements. Subparagraph A shall only apply with respect to a secondary component for which not less than 65% of the total direct material costs which are paid or incurred within the meaning of Section 46(1) and any regulations issued under Section 263A by the taxpayer to produce such secondary component are attributable to primary components which are mined, produced, or manufactured in the United States. B. Phase out and termination. Section 45XB3 is amended. 1. In the heading by inserting and termination after phase out. 2. In subparagraph A, in the matter of preceding clause I, by striking subparagraph C and inserting subparagraph C and D, and 3. By striking subparagraph C and inserting the following. C. Phase out for applicable critical minerals other than metallurgical coal. 1. In general, the case of any applicable critical mineral other than metallurgical coal produced after December 31st, 2030, the amount determined under this subsection with respect to such mineral shall be equal to the product of I, the amount determined under paragraph 1 with respect to such mineral as determined without regard to this subparagraph, multiplied by 2, the phase-out percentage under clause 2. 2. Phase-out percentage for applicable critical minerals other than metallurgical coal. The phase-out percentage under this clause is equal to 1, in the case of any applicable critical mineral produced during calendar year 2031, 75%. 2, in the case of any applicable critical mineral produced during calendar year 2032, 50%. 3, in the case of any applicable critical mineral produced during calendar year 2033, 25%. And 4, in the case of any applicable critical mineral produced after December 31st, 2033, 0%. D, termination for wind energy components. This section shall not apply to any wind energy component produced and sold after December 31st, 2027. E, termination for metallurgical coal. This section shall not apply to any metallurgical coal produced after December 31st, 2029. C, restrictions relating to prohibited foreign entities. Section 45X is amended, 1, in subsection C1 by adding at the end the following new subparagraph. C, material assistance from prohibited foreign entities. In the case of taxable years beginning after the date of enactment of this subparagraph, the term eligible component shall not include any property, which includes any material assistance from a prohibited foreign entity, as defined in section 7701A52, as applied by substituting used in a product sold before January 1st, 2027 for used in a product sold before January 1st, 2030 in subparagraph D3V BB thereof. And 2, in subsection D, as amended by subsection A of this section, by adding at the end the following new paragraph. 4, restrictions relating to prohibited foreign entities. A, in general, no credit shall be determined under subsection A for any taxable year if the taxpayer is 1, a specified foreign entity, as defined in section 7701A51B, or 2, a foreign influenced entity, as defined in section 7701A51D, without regard to clause 2 thereof. B, effective control. In the case of a taxpayer for which section 7701A51D12 is determined to apply for the taxable year, no credit shall be determined under subsection A for such taxable year if such determination relates to an eligible component described in subsection C1. D, modification of definition of battery module. Section 45XC5B3 is amended. 1, in subclass IBB by striking and at the end. 2, in subclause 2 by striking the period at the end and inserting and. And 3, by adding at the end the following new subclause. 3, which is comprised of all other essential equipment needed for battery functionality, such as current collector assemblies and voltage sense harnesses, thermal collection assemblies, or other essential energy collection equipment. E, inclusion of metallurgical coal as an applicable critical mineral for purposes of the Advanced Manufacturing Production Credit. 1, in general, section 45XC6 is amended. A, by redesignating subparagraphs R through Z as subparagraphs S through AA respectively, and B, by inserting after subparagraph Q the following new subparagraph R, metallurgical coal. Metallurgical coal which is suitable for the use in the production of steel within the meaning of the notice published by the Department of Energy entitled Critical Mineral List, addition of metallurgical coal used for steel making, 90 Federal Regulation 22711, May 29th, 2025, regardless of whether such production occurs inside or outside of the United States. 2, credit amount. Section 45XB1M is amended by inserting 2.5% in the case of metallurgical coal after 10%. F, effective dates. 1, in general, except as provided in paragraph 2, the amendments made by this section shall apply to taxable years beginning after the date of the enactment of this act. 2, modification of provision relating to sale of integrated components. The amendment made by subsection A shall apply to components sold during taxable years beginning after December 31st, 2026. Section 7515, restriction on the extension of Advanced Energy Product Credit Program. A, in general, section 48C E3C is amended by striking shall be increased and inserting shall not be increased. B, effective date. The amendment is made by this section shall take effect on the date of enactment of this act. Subchapter B, enhancement of America First energy policy. Section 7521, extension and modification of clean fuel production credit. A, prohibition on foreign feedstocks. 1, in general, section 45ZF1A is amended. A, in clause 1, 2, BB by striking and at the end. B, in clause 2 by striking the period at the end and inserting and C, by adding at the end the following new clause. 3, such fuel is exclusively derived from a feedstock by which was produced or grown in the United States, Mexico, or Canada. 2, effective date. The amendments made by this subsection shall apply to transportation fuel produced after December 31st, 2025. B, prohibition on negative emission rates. 1, in general, section 45ZB1 is amended. A, by striking subparagraph C and inserting the following. C, rounding of emissions rate. The Secretary may round the emissions rate under subparagraph B to the nearest multiple of 5 kilograms of CO2e per MMBTU, and B, by adding at the end the following new subparagraph. E, prohibition on negative emission rates. For purposes of this section, the emissions rate for a transportation fuel may not be less than 0. 2. Effective date. The amendments made by this subsection shall apply to emissions rates published for transportation fuel produced after December 31st, 2025. C. Determination of emissions rate. 1. In general, Section 45ZB1B is amended by adding at the end the following new clauses. 4. Exclusion of indirect land use changes. Notwithstanding clauses 1, 2, and 3, the emissions rate shall be adjusted as necessary to exclude any emissions attributed to indirect land use change. Any such adjustment shall be based on regulations or methodologies determined by the Secretary. 5. Animal manures. With respect to any transportation fuel which is derived from animal manure, the Secretary, 1, shall provide a distinct emissions rate with respect to such fuel based on the specific animal manure feedstock, which may include dairy manure, swine manure, poultry manure, or any other sources as are determined appropriate by the Secretary, and 2, notwithstanding subparagraph E, may provide an emissions rate that is less than 0. 2, conforming amendment. Section 45Z-B1B1 is amended by striking clauses 2 and 3 and inserting clauses 2, 3, 4, and 5. 3, effective date. The amendments made by this subsection shall apply to emissions rates published for transportation fuel produced after December 31st, 2025. D, extension of clean fuel production credit. Section 45ZG is amended by striking December 31st, 2027 and inserting December 31st, 2029. E, preventing double credit. Section 45ZD5 is amended 1 in subparagraph A, in Clause 2 by striking and at the end, B, in Clause 3 by striking the period at the end and inserting and C, by adding at the end the following new clause. 4, is not produced from a fuel for which a credit under this section is allowable, and 2, by adding at the end the following new subparagraph. C, regulations and guidance. The Secretary shall issue such regulations or other guidance as the Secretary determines necessary to carry out the purposes of subparagraph A4. F, sales to unrelated persons. Section 45Z F3 is amended by adding at the end the following. The Secretary may prescribe additional related person rules similar to the rule described in the preceding sentence for entities which are not described in such sentence, including rules for related persons with respect to which the taxpayer has reason to believe will sell fuel to an unrelated person in a manner described in subsection A4. G, treatment of sustainable aviation fuel. 1, coordination of credits. A, in general, Section 45ZA3 is amended. 1, in the heading by striking special and inserting adjusted, and 2, by adding at the end the following new subparagraph. C, coordination of credits. In the case of a transportation fuel which is sustainable aviation fuel, which is sold before October 1st, 2025, the amount of the credit determined under paragraph 1 with respect to any gallon of such fuel shall be reduced by an amount equal to the amount of the sustainable aviation fuel credit allowable under Section 6426K1. B, effective date. The amendments made by this paragraph shall apply to fuel sold after December 31st, 2025. 2, elimination of special rate. A, in general, Section 45ZA3, as amended by paragraph 1, is amended by 1, striking subparagraph A, and 2, by redesignating subparagraph C as subparagraph A. B, conforming amendment. Section 45ZC1 is amended by striking the $1 amount in subject A to B, the 35-cent amount in subsection A3A1, and the $1.75 amount in subsection A3A2, and inserting and the $1 amount in subsection A2B. C, effective date. The amendments made by this paragraph shall apply to fuel produced after December 31st, 2025. H, sustainable aviation fuel credit. Section 6426K is amended by adding at the end the following new paragraph. 4, termination. This subsection shall not apply to any sale or use for any period after September 30th, 2025. 1, regulation or registration of producers of fuel eligible for clean fuel production credit. 1, in general, Section 13704B5 of Public Law 117-169 is amended by striking after Section 6426K3 and inserting after Section 40B. 2, effective date. The amendment made by this subsection shall apply to transportation fuel produced after December 31st, 2024. J, extension and modification of small agrobiodiesel producer credit. 1, in general, Section 48 is amended. A, in subsection B4, 1, in subparagraph A, by striking 10 cents and inserting 20 cents. 2, in subparagraph B, by inserting in a manner which complies with the requirements under section 45Z F1 A3 after produced by an eligible small agribiodiesel producer. And 3, by adding at the end of the following new subparagraph. D, coordination with clean fuel production credit. The credit determined under this paragraph with respect to any gallon of fuel shall be in addition to any credit determined under section 45Z with respect to such gallon of fuel. And B, in subsection G, by inserting or, in the case of the small agribiodiesel producer credit, any sale or use after December 31st, 2026, after December 31st, 2024. 2, transfer of credit. Section 6418F1A is amended by adding at the end the following new clause. XII, so much of the biodiesel fuels credit determined under Section 40A, which consists of the small agribiodiesel producer credit determined under subsection B4 of such section. 3, effective date. The amendments made by this subsection shall apply to fuel sold or used after June 30th, 2025. K, restrictions relating to prohibited foreign entities. 1, in general, Section 45ZF is amended by adding at the end the following new paragraph. 8, restrictions relating to prohibited foreign entities. A, in general, no credit shall be determined under subsection A for any taxable year beginning after the date of enactment of this paragraph if the taxpayer is a specified foreign entity as defined in section 7701A 51B. B, other prohibited foreign entities. No credit shall be determined under subsection A for any taxable year beginning after the date which is 2 years after the date of enactment of this paragraph if the taxpayer is a foreign influenced entity as defined in section 770A 51D without regard to clause 1, 2 thereof. 2, effective date. The amendment made by this subsection shall apply to taxable years beginning after the date of enactment of this act. Section 7522, restrictions on carbon oxide sequestration credit. 1, restrictions relating to prohibited foreign entities. Section 45QF is amended by adding at the end the following new paragraph. 10, restrictions relating to the prohibited foreign entities. No credit shall be determined under subsection A for any taxable year beginning after the date of enactment of this paragraph. The taxpayer is A, a specified foreign entity as defined in section 7701A51B, or B, a foreign influenced entity as defined in section 7701A51D, determined without regard to clause 1, 2 thereof. B, parity for different uses and utilizations of qualified carbon oxide. Section 45Q is amended. 1, in subsection A,
A, in paragraph 2B2 by adding and at the end. B, in paragraph 3 by striking subparagraph B and inserting the following. B1, disposed of by the taxpayer in secure geological storage and not used by the taxpayer as described in clause 2 or 3. 2, used by the taxpayer as a tertiary injectant in a qualified enhanced oil or natural gas recovery project and disposed of by the taxpayer in secure geological storage. Or 3, utilized by the taxpayer in a manner described in subsection F5 and C by striking paragraph 4.2 in subsection B, A in paragraph 1 by striking subparagraph A and inserting the following. A, in general, except as provided in subparagraph B or C, the applicable dollar amount shall be an amount equal to 1, for any taxable year beginning in a calendar year after 2024 and before 2027, $17, and 2, for any taxable year beginning in a calendar year after 2026, an amount equal to the product of $17 and the inflation adjustment factor for such calendar year determined under section 43B3B for such calendar year, determined by substituting 2025 for 1990, and 2, in subparagraph B by striking shall be applied and all that follows through the period and inserting shall be applied by substituting $36 for $17 each place it appears. B, in paragraph 2B by striking paragraphs 3A and 4A and inserting paragraph 3A and C in paragraph 3 by striking the dollar amounts applicable under paragraph 3 or 4 and inserting the dollar amount applicable under paragraph 3. 3, in subsection F, A, in paragraph 5B1, by striking 4B2 and inserting 3B3, and B, in paragraph 9, by striking paragraphs 3 and 4 of subsection A, and inserting subsection A3 and 4 in subsection H3A2 by striking paragraph 3A or 4A of subsection A, and inserting subsection A3A. C, conforming amendment section 6417 D3C 12BB is amended by striking paragraph 3A or 4A of section 45QA and inserting section 45QA3A. D, effective dates. 1, restrictions relating to prohibited foreign entities. The amendment made by subsection A shall apply to taxable years beginning after the date of enactment of this Act. 2, parity for different uses and utilizations of qualified carbon oxide. The amendments made subsections B and C shall apply to facilities or equipment placed in service after the date of enactment of this Act. Section 70523, intangible drilling and development costs taken into account for purposes of computing adjusted financial statement income. A, in general, Section 56A C13 is amended. 1, by striking paragraph A and inserting the following. A, reduced by 1, depreciation deductions allowed under Section 167 with respect to property to which Section 168 applies to the extent of the amount allowed as deductions in computing taxable income of the year, and 2, any deduction allowed for expenses under Section 263C, including any deduction for such expenses under Section 59E or 291B2 with respect to property described therein to the extent of the amount allowed as deductions in computing taxable income for the year, and 2, by striking subparagraph B1 and inserting the following. 1, to disregard any amount of 1, depreciation expense that is taken into account on the taxpayer's applicable financial statement with respect to such property, and 2, depletion expense that is taken into account on the taxpayer's applicable financial statement with respect to the intangible drilling and development costs of such property, and B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70524, income from hydrogen storage, carbon capture, advanced nuclear, hydropower, and geothermal energy added to qualifying income of certain publicly traded partnerships. A, in general, Section 7704 D1E is amended. 1, by striking income and gains derived from the exploration and inserting the following. Income and gains derived from 1, the exploration, 2, by inserting or before industrial source, and 3, by inserting or the transportation or storage and all that follows and inserting the following. 2, the transportation of storage or storage of 1, any fuel described in subsection B, C, D, E, or K of section 6426, or any alcohol fuel defined in section 6426B4A, or any biodiesel fuel as defined in section 40AD1, or sustainable aviation fuel as defined in section 40BD1, or 2, liquefied hydrogen or compressed hydrogen. 3, in the case of qualified facility as defined in section 45QD, without regard to any date by which construction of the facility or equipment is required to begin, not less than 50% of the total carbon oxide production of which is qualified carbon oxide as defined in section 45QE. 1, the generation, availability for such generation or storage of electric power at such facility, or 2, the capture of carbon dioxide by such facility. 4, the production of electricity from any advanced nuclear facility as defined in section 45JD2. 5, the production of electricity or thermal energy exclusively using a qualified energy resource described in subparagraph D or H of section 45C1, or 4 or 6, the operation of energy property described in clause 3 or 7 of Section 48A3A determined without regard to any requirement under such section with respect to the date on which construction of property begins. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70525, allow for payments to certain individuals who die fuel. A, in general, subchapter B of Chapter 65, as amended by the preceding provisions of this Act, is amended by adding at the end the following new section. Section 6435, died fuel. A, in general, if a person establishes to the satisfaction of the Secretary that such person meets the requirements by subsection B with respect to diesel fuel or kerosene, then the Secretary shall pay to such person an amount without interest equal to the tax described in subsection B2A with respect to such diesel fuel or kerosene. B, requirements. 1. In general, a person meets the requirements of this subsection with respect to diesel fuel or kerosene if such person removes from a terminal eligible indelibly dyed diesel fuel or kerosene. 2. Eligible indelibly dyed diesel fuel or kerosene defined. The term eligible indelibly dyed diesel fuel or kerosene means diesel fuel or kerosene A, with respect to which a tax under Section 4081 was previously paid and not credited or refunded, and B, which is exempt from taxation under Section 4082A. C, cross-reference. For civil penalty for excessive claims under this section, see Section 6675. B, conforming amendments. 1. Section 6206 is amended. A, by striking or 6427, each place it appears, and inserting 6427 or 6435, and B, by striking 6420 and 6421 and inserting 6420, 6421, and 6435. 2. Section 6430 is amended. A, by striking or at the end of paragraph 2, by striking the period at the end of paragraph 3 and inserting or, and by adding at the end of the following new paragraph 4, which are removed as eligible indelibly dyed diesel fuel or kerosene under Section 6435. 3. Section 6675 is amended. A, in subsection A, by striking or 6427 relating to fuels not used by taxable purposes and inserting 6427 relating to fuels not used for taxable purposes, or 6435 relating to eligible indelibly dyed fuel, and B, in subsection B1 by striking 6421 or 6427 and inserting 6421, 6427, or 6435. 4. The table of sections for subchapter B of Chapter 65, as amended by the preceding provisions of this Act, is amended by adding at the end the following new item. C, 6435, dyed fuel. C, effective date. The amendments made by this section shall apply to eligible indelibly dyed diesel fuel or kerosene removed on or after the date that is 180 days after the date of the enactment of this section. Subchapter C, other reforms. Section 70531, modifications to de minimis entry privilege for commercial shipments. Civil penalty. 1. Additional penalty imposed. Section 321 of the Tariff Act of 1930. 19 U.S.C. 1321 is amended by adding at the end the following new subsection. C. Any person who enters, introduces, facilitates, or attempts to introduce an article into the United States using the privilege of this section, the importation of which violates any other provision of United States customs law, shall be assessed, in addition to any other penalty permitted by law, a civil penalty of up to $5,000 for the first violation and up to $10,000 for each subsequent violation. 2. Effective date. The amendment made by paragraph 1 shall take effect 30 days after the date of the enactment of this Act. B. Repeal of commercial shipment exemption. 1. Repeal Section 321A2 of such Act. 19 U.S.C. 1321A2 is amended by striking of this Act or and all that follows through subdivision 2 and inserting of this Act and 2. Conforming repeal. Subsection C of such Section 321 as added by subsection A of this section is repealed. 3. Effective date. The amendments made by this subsection shall take effect on July 1, 2027. Chapter 6, Enhancing Deduction and Income Tax Credit, Guardrails and Other Reforms. Section 70601, Modification and Extension of Limitation on Excess Business Losses of Non-Corporate Taxpayer. A. Rule made permanent. Section 461L1 is amended by striking, and before January 1, 2029, each place it appears. B. Adjustment of amounts for calculation of excess business loans. Section 46113C is amended. 1. In the matter preceding Clause 1 by striking December 31, 2028 and inserting December 31, 2025, and 2 in Clause 2 by striking 2017 and inserting 2024. C. Effective dates. 1. Rule made permanent. The amendment made by subsection A shall apply to taxable years beginning after December 31, 2026. 2. Adjustment of amounts for calculation of excess business loan. The amendments made by subsection B shall apply to taxable years beginning after December 31, 2025. Section 70602, Treatment of Payments for Partnerships to Partners for Property or Services. A. In general. Section 707A2 is amended by striking under regulations prescribed and inserting except as provided. B. Effective date. The amendment made by this section shall apply to services performed and property transferred after the date of the enactment of this Act. C. Rule of construction. Nothing in this section or the amendments made by this section shall be construed to create any inference with respect to the proper treatment under Section 707A of the Internal Revenue Code of 1986 with respect to payments from a partnership to a partner for services performed or property transferred on or before the date of the enactment of this Act. Section 70603, Excessive Employee Remuneration from Control Group Members and Allocation of Deduction. A. Application of Aggregation Rules. Section 162M is amended by adding at the end of the following new paragraph. 7. Remuneration from Control Group Members. A. In general, in the case of any publicly held corporation which is a member of a control group, 1. Paragraph 1 shall be applied by substituting specified covered employee for covered employee, and 2. If any person which is a member of such control group other than such publicly held corporation provides applicable employee remuneration to an individual who is a specified covered employee of such control group, and the aggregate amount described in subparagraph B2 with respect to such specified covered employee exceeds $1 million, 1. Paragraph 1 shall apply to such person with respect to such remuneration, and 2. Paragraph 1 shall apply to such publicly held corporation and to each such related person by substituting the allocable limitation amount for $1 million. B. Allocable limitation amount for purposes of this paragraph. The term allocable limitation amount means with respect to any member of the control group referred to in subparagraph A with respect to any specified covered employee of such control group, the amount which bears the same ratio to $1 million as 1. The amount of applicable employee remuneration provided by such member with respect to such specified covered employee bears to 2. The aggregate amount of applicable employee remuneration provided by all such members with respect to such specified covered employee. C. Specified covered employee. For purposes of this paragraph, the term specified covered employee means with respect to any control group, 1. Any employee described in subparagraph A, B, or D of paragraph 3 with respect to the publicly held corporation which is a member of such control group, and 2. Any employee who would be described in subparagraph C of paragraph 3 if such subparagraph were applied by taking into account the employees of all members of the controlled group. D. Controlled group. For purposes of this paragraph, the term controlled group means any group treated as a single employer under subsections B, C, M, or O of section 414. B. Effective date. The amendment made by this section shall apply to taxable years beginning after December 31, 2025. Section 70604, Third-Party Litigation Funding Reform. A. In general, Subtitle D, as amended by the preceding provisions of this Act, is amended by adding at the end the following new chapter, Chapter 50C, Litigation Financing, Section 500F1, Tax Imposed, Section 5000F2, Definition, Section 5000F3, Special Rules, Section 5000F1, Tax Imposed. In general, a tax is hereby imposed for each taxable year in an amount equal to 31.8% of any qualified litigation proceeds received by a covered party. B, application of tax for pass-through entities. In the case of a covered party that is a partnership, S-corporation, or other pass-through entity, the tax imposed under subsection A shall be applied at the entity level. Section 5000F2, definitions. In this chapter, 1. Civil action. A. In general, the term civil action means any civil action, administrative proceeding, claim, or cause of action. B. Multiple actions. The term civil action may, unless otherwise indicated, include more than one civil action. 2. Covered party. A. In general, the term covered party means with respect to any civil action, any third party, including an individual, corporation, partnership, or sovereign wealth fund to such action which 1. Receives funds pursuant to a litigation financing agreement, and 2. Is not an attorney representing a party to such civil action. B. Inclusion of domestic and foreign entities. Subparagraph A shall apply to any third party without regard to whether such party is created or organized in the United States or under the law of the United States or any state. 3. Litigation financing agreement. A. In general, the term litigation financing agreement means with respect to any civil action a written agreement, 1, whereby a third party agrees to provide funds to one of the named parties or any law firm affiliated with such civil action, and 2, which creates a direct or collateralized interest in the proceeds of such action by settlement, verdict, judgment, or otherwise, which 1 is based in whole or in part on a funding-based obligation to A. Such civil action, B. The appearing counsel, C. Any contractual co-counsel, or D. The law firm of such counsel or co-counsel, and 2 is executed with 606. A. Any attorney representing a party to such civil action, B. Any co-counsel in such civil action with a contingent fee interest in the representation of such party, C. Any third party that has a collateral-based interest in the contingency fees of the counsel or co-counsel firm which is related in whole or in part to the fees derived from representing such party, or D. Any named party in such civil action. B. Substantially similar agreements. The term litigation financing agreement shall include any contract, including any option, forward contract, futures contract, short position, swap, or similar contract, or other agreement which, as defined by the Secretary, is substantially similar to an agreement described in subparagraph A. C. Exceptions. The term litigation financing agreement shall not include any agreement, 1, under which the total amount of funds described in subparagraph A1 with respect to an individual civil action is less than $10,000, or 2, in which the third party described in subparagraph A 1 has a right to receive proceeds which are derived from or pursuant to such agreement that are limited to A. Repayment of the principal of a loan, B. Repayment of the principal of a loan plus any interest on such loan, provided that the rate of interest does not exceed the greater amount of A 7%, or B. a rate equal to twice the average annual yield on 30-year United States Treasury securities, 608. As determined for the year preceding the date on which such agreement was executed, or C. Reimbursement of attorney's fees, or 2, bears a relationship described in section 267B to the named party receiving the payment described in subparagraph A1. 4. Qualified litigation proceeds. A. In general, the term qualified litigation proceeds means with respect to any taxable year an amount equal to the realized gains, net income, or other profit received by a covered party during such taxable year, which is derived from or pursuant to any litigation financing agreement. B. Anti-netting. Any gains, income, or profit described in subparagraph A shall not be reduced or offset by any ordinary or capital loss in the taxable year. C. Prohibition on exclusion of certain amounts. In determining the amounts of realized gain under subparagraph A, amounts described in section 104A2 and 892A1 shall not be excluded. Section 5000F3, Special Rules. A, withholding of tax on litigation proceeds. Any applicable person having the control, receipt, or custody of any proceeds from a civil action by settlement, judgment, or otherwise, with respect to which such person had entered into a litigation financing agreement, shall deduct and withhold from such proceeds a tax equal to 15.9% of the qualified litigation proceeds, which are required to be paid to a third party pursuant to such agreement. B, applicable person. For purposes of this section, the term applicable person means any person which, 1, is a named party in a civil action or law firm affiliated with such civil action, and 2, has entered into a litigation financing agreement with respect to such civil action. C, application of withholding provisions. 1, liability for withheld tax. Every person required to deduct and withhold any tax under this chapter is hereby made liable for such tax and is hereby indemnified against the claims and demands of any person for the amount of any payments made in accordance with the provisions of this chapter. 2, withheld tax as credit to recipient of qualified litigation proceeds. Qualified litigation proceeds on which any tax is required to be withheld at the source under this chapter shall be included in the return of the recipient of such proceeds. By any amount of tax so withheld shall be credited against the amount of tax as computed in such return. 3, tax paid by recipient of qualified litigation proceeds if A, any person in violation of the provisions of this chapter fails to deduct and withhold any tax under this chapter, and B, thereafter the tax against which such tax may be credited is paid. The tax is also required to be deducted and withheld, shall not be collected from such person, but this paragraph shall in no case relieve such person from liability for interest or any penalties or additions to the tax otherwise applicable in respect of such failure to deduct and withhold. 4, refunds and credits with respect to withheld tax. Where there has been any overpayment of tax under this chapter, any refund or credit made under Chapter 6.5 shall be made to the withholding agent unless the amount of such tax was actually withheld by the withholding agent. B, exclusion from definition of capital assets. Section 1221A is amended. 1, in paragraph 7 by striking or at the end. 2, in paragraph 8 by striking the period at the end and inserting or, and 3, by striking at the end the following new paragraph. 9, any financial arrangement created by or any proceeds derived from a litigation financing agreement as defined under section 5000F2. C, removal from gross income, part 3 of subchapter B of chapter 1 as amended by the preceding provisions of this act is amended by inserting after section 139L the following new section. Section 139M, qualified litigation proceeds. Gross income shall not include any qualified litigation proceeds as defined in section 5000F2. D, clerical amendments. 1, section 7701A16 is amended by inserting 5000F-3C1 before 1441. Two, the table of chapters for subtitle D as amended by the preceding provisions of this act is amended by inserting after the item relating to chapter 50B the following new item, chapter 50C, litigation financing. 3, the table of sections for part 3 of subchapter B of chapter 1 as amended by the preceding provisions of this act is amended by inserting after the item relating to section 139L the following new item, section 139M, qualified litigation proceeds. E, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70605, excise tax on certain remittance transfers. A, in general, Chapter 36 is amended by inserting after subchapter B the following new subchapter. Subchapter C, remittance transfers. Section 4475, imposition of tax. Section 4475, imposition of tax. A, in general, there is hereby imposed on any remittance transfer a tax equal to 1% of the amount of such transfer. B, payment of tax.
One, in general, the tax imposed by this section with respect to any remittance transfer shall be paid by the sender with respect to such transfer. Two, collection of tax. The remittance transfer provider with respect to any remittance transfer shall collect the amount of the tax imposed under subsection A with respect to such transfer from the sender and remit such tax quarterly to the Secretary at such time and in such manner as provided by the Secretary. 3, secondary liability. Where any tax imposed by subsection A is not paid at the time the transfer is made, then to the text that such tax is not collected, such tax shall be paid by the remittance transfer provider. C, tax limited to cash and similar instruments. The tax imposed under subsection A shall apply only to any remittance transfer to which the sender provides cash, a money order, a cashier's check, or any other similar physical instrument as determined by the Secretary to the remittance transfer provider. D, non-application to certain non-cash remittance transfers. Subsection A shall not apply to any remittance transfer for which the funds being transferred are withdrawn from an account held in or by a financial institution, A, which is described in subparagraphs A through H of Section 5312A2 of Title 31 United States Code, and B, that is subject to the requirements under subchapter 2 of Chapter 53 of such title, or 2, funded with a debit card or a credit card which is issued in the United States. E, definitions. For purpose of this section, 1, in general, the terms remittance transfer provider, and sender shall each have their respective meanings given such terms by Section 919G of the Electronic Fund Transfer Act, 15 U.S.C. 169301G. 2, credit card. The term credit card has the same meaning given each such term under Section 920C3 of the Electronic Fund Transfer Act, 15 U.S.C. 169302C3. 3, debit card. The term debit card has the same meaning given under such term such Section 920C2 of the Electronic Fund Transfer Act, 15 U.S.C. 169302C2, without regard to subparagraph B of such section. F, application of anti-conduit rules for purposes of Section 7701L with respect to any multiple party arrangements involving the sender. A remittance transfer shall be treated as a financing transaction. B, conforming amendment. The table of subchapters for Chapter 36 is amended by inserting after the item relating to Subchapter B the following new item, Subchapter C, remittance transfers. C, effective date. The amendments made by this section shall apply to transfers made after December 31, 2025. Section 70606, enforcement provisions with respect to COVID-related employee retention credits. A, assessable penalty for failure to comply with due diligence requirements. 1, in general, any COVID ERTC promoters which provides aid, assistance, or advice with respect to any COVID ERTC document and which fails to comply with due diligence requirements imposed by the Secretary with respect to determining eligibility for or the amount of any credit or advance payment of a credit under Section 3134 of the Internal Revenue Code of 1986 shall pay a penalty of $1,000 for each such failure. Due diligence requirements. The due diligence requirements referred to in paragraph 1 shall be similar to the due diligence requirements imposed under Section 6695G of the Internal Revenue Code of 1986. 3, restriction to documents used in connection with returns or claims for refund. Paragraph 1 shall not apply with respect to any COVID ERTC document unless such document constitutes or relates to a return for claim for refund. 4, treatment as assessable penalty, etc. For purposes of the Internal Revenue Code of 1986, the penalty imposed under paragraph 1 shall be treated as a penalty which is imposed under Section 6695G of such code and assessed under Section 6201 of such code. 5, Secretary. For purposes of this subsection, the term Secretary means the Secretary of the Treasury or the Secretary's delegate. B, COVID ERTC promoter. For purposes of this section, 1, in general, the term COVID ERTC promoter means with respect to any COVID ERTC document, any person which provides aid, assistance, or advice with respect to such document if A, such person charges or receives a fee for such aid, assistance, or advice, which is based on the amount of the refund or credit with respect to such document and with respect to such person's taxable year in which such person provided such assistance or the preceding taxable year, the aggregate of the gross receipts of such person for aid, assistance, and advice with with respect to all COVID ERTC documents exceeds 20% of the gross receipts of such person for such taxable year, or B, with respect to such person's taxable year in which such person provided such assistance or the preceding taxable year. 1, the aggregate of the gross receipts of such person for aid, assistance, and advice with respect to all COVID ERTC documents exceeds 50% of the gross receipts of such person for such taxable year, or both. 2, both, such 1, such aggregate gross receipts exceed 20% of the gross receipts of such person for such taxable year, and 2, the aggregate of the gross receipts of such person for aid, assistance, and advice with respect to all COVID ERTC documents determined after application of paragraph 3 exceeds $500,000. 2, exception for certified professional employer organizations, the term COVID ERTC promoter shall not include a certified professional employer organization as defined in section 7705 of the Internal Revenue Code of 1986. 3, aggregation rule. For purposes of paragraph 1, all persons treated as a single employer under subsection A or B of section 52 of the Internal Revenue Code of 1986 or subsection M or O of section 414 of such code shall be treated as one person. 4, short taxable years. In the case of any taxable year of less than 12 months, a person shall be treated as a COVID ERTC promoter if such person is described in paragraph 1, either with respect to such taxable year or by treating any reference to such taxable year as a reference to the calendar year in which such taxable year begins. C, COVID ERTC document. For purposes of this section, the term COVID ERTC document means any return, affidavit, claim, or other document related to any credit or advance payment of a credit under section 3134 of the Internal Revenue Code of 1986, including any document related to eligibility for or the calculation or determination of any amount directly related to any such credit or advance payment. D, limitation on credits and refunds. Notwithstanding sections 6511 of the Internal Revenue Code of 1986, no credit under section 3134 of the Internal Revenue Code of 1986 shall be allowed, and no refund with respect to any such credit shall be made after the date of the enactment of this act unless a claim for such credit or refund was filed by the taxpayer on or before January 31, 2024. E, extension of limitation on assessment. Section 3134L is amended to read as follows. 1, extension of limitation on assessment. 1, in general, notwithstanding section 6501, the limitation on the time period for the assessment of any amount attributable to a credit claimed under this section shall not expire before the date, that is 6 years after the latest of A, the date on which the original return, which includes the calendar quarter with respect to such credit, is determined as filed, B, the date on which such return is treated as filed under section 6501B2, or C, the date on which the claim for credit or refund with respect to such credit is made. Deduction 2, deduction for wages taken into account in determining improperly claimed credit. A, in general, notwithstanding section 6511 in the case of an assessment attributable to a credit claimed under this section, the limitation on the time period for credit or refund of any amount attributable to a deduction for improperly claimed ERTC wages shall not expire before the time period for such assessment expires under paragraph 1. B, improperly claimed ERTC wages. For purposes of this paragraph, the term improperly claimed ERTC wages means with respect to an assessment attributable to a credit claimed under this section, the wages with respect to which a deduction would not have been allowed if the portion of the credit to which such assessment relates had been properly claimed. F, amendment to penalty for erroneous claim for refund or credit. Section 6676A is amended by striking income tax and inserting income or employment tax. G, effective dates. 1, in general, the provisions of this section shall apply to aid, assistance, and advice provided after the date of the enactment of this act. 2, limitation on credits and refunds. Subsection D shall apply to credits and refunds allowed or made after the date of the enactment of this act. 3, extension of limitation on assessment. The amendment made by subsection E shall apply to assessments made after the date of the enactment of this act. 4, amendment to penalty for erroneous claim for a refund or credit. The amendment made by subsection F shall apply to claims for credit or refund after the date of the enactment of this act. H, regulations. The Secretary, as defined in subsection A5, shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section and the amendments made by this section. Section 70607, Social Security number requirement for American Opportunity and Lifetime Learning Credits. A, Social Security number of taxpayer required Section 25AG1 is amended to read as follows. 1. Identification requirement. A. Social Security number requirement. No credit shall be allowed under subsection A to an individual unless the individual includes on the return of tax for the taxable year, 1, such individual's Social Security number, and 2, in the case of a credit with respect to the qualified tuition and related expenses of an individual other than the taxpayer or the taxpayer's spouse, the name and Social Security number of such individual. B, institution. No American Opportunity Tax Credit shall be allowed under this section unless the taxpayer includes the employer identification number of any institution to which the taxpayer paid qualified tuition and related expenses taken into account under this section on the return of tax for the taxable year. C, Social Security number defined. For purposes of this amendment, the term Social Security number shall have the meaning given such term in section 24H7. B, omission treated as mathematical or clerical error, section 6213G2J, is amended by striking TIN and inserting Social Security number or employer identification number. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2025. Section 70608, Task Force on the Replacement of Direct File. Out of any money in the Treasury not otherwise appropriated, there is hereby appropriated for the fiscal year ending September 30, 2026, $15 million to remain available until September 2026 for necessary expenses of the Department of the Treasury to deliver to Congress within 90 days following the date of enactment of this act a report on 1, the cost of enhancing and establishing public-private partnerships which provide for free tax filing for up to 70% of all taxpayers calculated by adjusted gross income and to replace any direct e-file programs run by the Internal Revenue Service. 2, taxpayer opinions and preferences regarding a taxpayer-funded government-run service or a free service provided by the private sector. 3, assessment of the feasibility of a new approach, how to make the options consistent and simple for taxpayers across all participating providers, and how to provide features to address taxpayer needs. And 4, the cost, including options for differential coverage based on taxpayer-adjusted gross income and return complexity of developing and running a free direct e-file tax return system, including costs and build and administer such release. Subtitle B, Health, Chapter 1, Medicaid. Subchapter A, Reducing Fraud and Improving Enrollment Processes. Section 71101, Moratorium on Implementation of Rule Relating to Eligibility and Enrollment in Medicare Savings Programs. The Secretary of Health and Human Services shall not, during the period beginning on the date of enactment of this section and ending September 30, 2034, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicare and Medicaid Services in September 21, 2023, entitled Streamlining Medicaid, Medicare Savings Program Eligibility, Determination, Enrollment, 88 Fed Reg 65230, and shall not implement, administer, or enforce the amendments made to the following sections of Title 42 Code of Federal Regulations. 1, Section 406.21C, 2, Section 435.4, 3, Section 435.601, 4, Section 435.909, 5, Section 435.911, 6, Section 435.952, Section 71102, moratorium on eligibility on implementation of rule relating to eligibility and enrollment for Medicaid, CHIP, and the Basic Health Program. The Secretary of Health and Human Services shall not, during the period beginning on the date of enactment of this section and ending September 30, 2024, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicaid and Medicaid Services on April 2, 2024, entitled Medicaid Program, Streamlining the Medicaid Children's Health Insurance Program and Basic Health Program Application, Eligibility, Determination, Enrollment, and Renewal Processes, 89 Fed Reg 22780, and shall not implement, administer, or enforce the amendments made by the following sections of Title 42 Code of Federal Regulations. 1, Part 431A, Section 431.10, C1, 1A2, B, Section 431.10, C11A3, C, Section 431.213D. 2, Part 435, A, Section 435.222, B, Section 435.223, C, Section 435.407, D, Section 435.601, E, Section 435.608, F, Section 435.831G, G, Section 435.907, H, Section 435.911C, 1, I, Section 435.912, J, Section 435.916, K, Section 435.919, L, Section 435.940, M, Section 435.952, N, Section 435.1200, 3, Part 436, A, Section 436.601, B, Section 436.831G, 4, Part 447, Section 447.56A15, 5, Part 457, A, Section 457.65D, B, Section 457.340D, C, Section 457.340F, D, Section 457.344, E, Section 457.348, F, Section 457.350, G, Section 457.480, H, Section 457.570, I, Section 457.805, B, J, Section 457.810A, K, Section 457.960, L, Section 457.1140, D4, M, Section 457.1170, N, Section 457.1180, Section 71103, reducing duplicate enrollment under the Medicaid and CHIP programs. A, Medicaid, 1, in general. Section 1902 of the Social Security Act, 42 U.S.C. 1396A, is amended A in subsection A, 1, in paragraph 86 by striking "and" at the end, 2, in paragraph 87 by striking the period and inserting "and 3, by inserting after paragraph 87 the following new paragraph. 88, provide, A, beginning not later than January 1, 2027, in the case of one of the 50 states and the District of Columbia, for a process to regularly obtain address information for individuals enrolled under such plan or a waiver of such plan, and in accordance with subsection, and B, beginning not later than October 1, 2029, 1, for the state to submit to the system established by the Secretary under subsection U with respect to individual enrolled or seeking to enroll under such plan not less frequently than once each month or during such determination or redetermination of the eligibility of such individual for medical assistance under such plan or waiver of such plan. 1, the Social Security number of such individual, if such individual has a Social Security number and is required to provide such number to enroll under such plan or waiver, and 2, such other information with respect to such individual as determined necessary by the Secretary for purposes of preventing individuals from simultaneously being enrolled under state plans or waivers of such plans of multiple states. 2, for the use of such system to prevent such simultaneous enrollment. And 3, in the case that such system indicates that an individual enrolled or seeking to enroll under such plan or waiver of such plan is enrolled under a state plan or waiver of such a plan of another state, for the taking of appropriate action as determined by the Secretary to identify whether such an individual resides in the state and disenroll an individual from the state plan of such state if such individual does not reside in such state unless such individual meets such an exception as the Secretary may specify, and B, by adding at the end the following new subsections. UU, prevention of enrollment under multiple state plans. 1, in general, not later than October 1, 2029, the Secretary shall establish a system to be utilized by the Secretary and states to prevent an individual from being simultaneously enrolled under the state plans of multiple states. Such system shall A, provide for the receipt of information submitted by a state under subsection A88B1, and B, not less than once each month, transmit information to a state or allow the Secretary to transmit information to a state regarding whether an individual enrolled or seeking to enroll under the state plan of such state or waiver of such plan is enrolled under the state plan or waiver of such plan of another state. 2, standards. The Secretary shall establish such standards as determined necessary by the Secretary to limit and protect information submitted under such system and ensure the privacy of such information consistent with subsection A7. 3, implementation funding. There are appropriated to the Secretary out of the amounts of the Treasury not otherwise appropriated, in addition to amounts otherwise available. For fiscal year 2026, $10 million for purposes of establishing the system and standards required under this subsection to remain available until expended, and B, for fiscal year 2029, $20 million for purposes of maintaining such system to remain available until expended. BV, process to obtain enrollee address information. 1, in general, for purposes of subsection A88A, a process to regularly obtain address information for individuals enrolled under a state plan or a waiver of such plan shall obtain address information from reliable data sources described in paragraph 2 and take such actions as the Secretary shall specify with respect to any changes to such address based on such information. 2, reliable data sources described. For purposes of paragraph 1, the reliable data sources described in this paragraph are the following. A, mail returned to the state by the United States Postal Service with a forwarding address. B, the National Change of Address database maintained by the United States Postal Service. C, a managed care entity as defined in Section 1932A1B or prepaid inpatient health care or prepaid ambulatory health plan, as such terms are defined in Section 1903M9D, that has a contract under the state plan if the address information is provided to such entity or plan directly from or verified by such entity or plan directly with such individual. D, other data sources as identified by the state and approved by the Secretary. 2, conforming amendments. A, Paris. Section 1903R3 of the Social Security Act, 42 U.S.C. 1396BR3 is amended 1 by striking in order and inserting a in order, 2 by striking through the public and inserting through 1 the public, 3 by striking the period at the end and inserting semicolon, and 2 beginning October 1, 2029, the system established by the Secretary under Section 1902 UU, and 4 by adding at the end the following new subparagraph. B, beginning October 1, 2029, the Secretary may determine that a state is not required to have in operation an eligibility determination system which provides for data matching for purposes of address verification under Section 1902VV through the system described in subparagraph A1 to meet the requirements of this paragraph. Managed care. Section 1932 of the Social Security Act, 42 U.S.C. 1396U-2, is amended by adding at the end the following new subsection. J, transmission of address information. Beginning January 1, 2027, each contract under a state plan with a managed care entity is defined in Section 1932A1B or with a prepaid inpatient health care or prepaid ambulatory health plan, such as such terms are defined in Section 1903M9D, shall provide that such entity or plan shall promptly transmit to the state any address information for an individual enrolled in such entity or plan that is provided to such entity or plan directly from or verified by such entity or plan directly with such individual. B, CHIP. 1. In general, Section 2107E1 of the Social Security Act, 42 U.S.C. 1397GGE1 is amended, A, by redesignating subparagraphs H through U as subparagraphs I through V, 1 through 5, respectively, and B, by inserting after subparagraph G the following new subparagraph. H, Section 1902A88 relating to address information for enrollees and prevention of simultaneous enrollments. 2, managed care. Section 2103F3 of the Social Security Act, 42 U.S.C. 1397CCF3, is amended by striking and E and inserting E and J. Section 71104, ensuring deceased individuals do not remain enrolled. Section 1902 of the Social Security Act, 42 U.S.C. 1396, as amended by Section 71103, is further amended, 1 in subsection A, in paragraph 87 by striking and inserting a semicolon, B, in paragraph 88 by striking the period at the end and inserting and C, by inserting after paragraph 88 the following new paragraph. 89, provide that the state shall comply with the eligibility verification requirements under subsection WW, except that this paragraph shall apply only in the case of the 50 states and the District of Columbia, and 2, by adding at the end of the following new subsection, WW, verification of certain eligibility criteria. 1, in general, for purposes of subsection A89, the eligibility verification requirements beginning January 1, 2028 are as follows. A, quarterly screening to verify enrollee status. The state shall, not less frequently than quarterly, review the death master file, as such term is defined in Section 203D of the Bipartisan Budget Act of 2013, or a successor system that provides such information needed to determine whether any individuals enrolled for medical assistance under the state plan or waiver of such plan are deceased. B, disenrollment under state plan. If the state determines, based on information obtained from the death master file, that an individual enrolled for medical assistance under the state plan or waiver of such plan is deceased, the state shall, 1, treat such information as factual information confirming the death of a beneficiary, 2, disenroll such individual from the state plan or waiver of such plan, in accordance with subsection A3, and 3, discontinue any payments for medical assistance under this title made on behalf of such individual, other than payments for any items or services furnished to such individual prior to the death of such individual. C, reinstatement of coverage in the event of error. If a state determines that an individual was misidentified as deceased based on information obtained from the death master file and was erroneously disenrolled for medical assistance under the state plan or waiver of such plan, based on such misidentification, the state shall immediately re-enroll such individual under the state plan or waiver of such plan, retroactive to the date of such disenrollment. 2, rule of construction. Nothing under this subsection shall be construed to preclude the ability of a state to use other electronic data sources to timely identify potentially deceased beneficiaries, so long as the state is also in compliance with the requirements of this subsection and all other requirements under this title relating to Medicaid eligibility determination and redetermination. Section 71105, ensuring deceased providers do not remain enrolled. Section 1902 KK1 of the Social Security Act, 42 U.S.C. 1396A KK1 is amended, 1, by striking the state and inserting A in general the state, and 2, by adding at the end the following new subparagraph. B, provider screening against death master file. Beginning January 1, 2028, as part of the enrollment or re-enrollment or revalidation of enrollment of a provider or supplier under this title, and not less frequently than quarterly during that period that such provider or supplier is so enrolled, the state conducts a check of the death master file, as such term is defined in Section 203D of the Bipartisan Budget Act of 2013, to determine whether such provider or supplier is deceased. Section 71106, payment reduction related to certain erroneous excess payments under Medicaid. In general, Section 1903U1 of the Social Security Act, 42 U.S.C. 1396BU1 is amended, 1, in subparagraph A by inserting for any audits conducted by the Secretary or at the option of the Secretary, audits conducted by the state after exceeds 0.03, 2, in subparagraph B, A, by striking the Secretary and inserting 1, subject to Clause 2, the Secretary, and B, by adding at the end the following new clause. 2, the amount waived under Clause 1 for a fiscal year may not exceed an amount equal to the erroneous excess payments for medical assistance described in subparagraph D1, 2, made for such fiscal year. 3, in subparagraph 2, by striking he and each place it appears and inserting the Secretary in such place. And 4, in subparagraph D1, A, in subclause 1, by striking and at the end. B, in subclause 2, by striking the period at the end of and inserting or payments where insufficient information is available to confirm eligibility, and C, by adding at the end the following new subclause. 3, payments other than payments described in subclause 1 for items and services furnished to an individual who is not eligible for medical assistance under the state plan or a waiver of such plan with respect to such items and services or payments where insufficient information is available to confirm eligibility. B, effective date. The amendments made by subsection A shall apply beginning with respect to fiscal year 2030. Section 71107, eligibility redeterminations, A in general. Section 1902E14 of the Social Security Act, 42 U.S.C. 1396AE14, is amended by adding at the end the following new subparagraph. L, frequency of eligibility redeterminations for certain individuals. 1, in general, subject to Clause 2 with respect to redeterminations of eligibility for medical assistance under a state plan or a waiver of such plan, scheduled on or after the first day of the first quarter that begins after December 31, 2026, the state shall make such a redetermination once every 6 months for the following individuals. 1, individuals enrolled under subsection A10A18. 2, individuals described in such subsection who are the otherwise enrolled under a waiver of such plan that provides coverage that is equivalent to a minimum essential coverage as described in section 5000AF1A of the Internal Revenue Code of 1986 and determined in accordance with standards prescribed by the Secretary and regulations to all individuals described in subsection A10A18. 2, exemption. The requirements described in section 1 shall not apply to any individual described in subsection XX9A22. 3, state defined. For purposes of this subparagraph, the term state means one of the 50 states or the District of Columbia. B, guidance. Not later than 180 days after the date of enactment of this section, the Secretary of Health and Human Services, acting through the Administrator of the Centers for Medicare and Medicaid Services, shall issue guidance relating to the implementation of the amendments made by this section. Section 71108, revising home equity limit for determining eligibility for long-term care services under the Medicaid program, revising home equity limit. Section 1917F1 of the Social Security Act, 42 U.S.C. 1396 PF1 is amended. 1. In subparagraph B.
A, by striking A state and inserting I, A state. B, in clause I, as inserted by subparagraph A. I, by striking $500,000 and inserting the amount specified in subparagraph A, and II, by inserting in the case of an individual's home that is located on a lot that is zoned for agricultural use after apply subparagraph A, and C, by adding at the end the following new clause. II, a state may elect, without regard to the requirements of section 1902A, 1, relating to statewideness, and section 1902A10B, relating to comparability, to apply subparagraph A in the case of an individual's home that is not described in clause I, by substituting for the amount specified in such subparagraph an amount that exceeds such amount but does not exceed $1 million, and 2, in subparagraph C. A, by inserting other than the amount specified in subparagraph B, II, relating to certain non-HIFE agricultural homes after specified in this paragraph, and B, by adding at the end the following new sentence in the case that application of the preceding sentence would result in a dollar amount other than the amount specified in subparagraph BI relating to certain agricultural homes exceeding $1 million such amount shall be deemed to be equal to $1 million. B, clarification. Section 1902 of the Social Security Act, 42 U.S.C. 1396A is amended. 1, in subsection R2 by adding at the end the following new subparagraph C. This paragraph shall not be construed as permitting a state to determine the eligibility of an individual for medical assistance with respect to nursing facility services or other long-term care services without application of the limit under section 1917 F1 and 2 in subsection E14D IV A by striking subparagraphs and inserting I in general subparagraphs, and B, by adding at the end the following new subclause. II, application of home equity interest limit. Section 1917F shall apply for purposes of determining the eligibility of an individual for medical assistance with respect to nursing facility services or other long-term service care. C, effective date. The amendments made by subsection A shall apply beginning on January 1, 2028. Sec 71109, Alien Medicaid Eligibility. A, Medicaid. Section 1903V of the Social Security Act, 42 U.S.C. 1396BV is amended. 1, in paragraph 1 by striking and 4 and inserting 4 and 5 and 2 by adding at the end the following new paragraph. 5, notwithstanding the preceding paragraphs of this subsection beginning on October 1, 2026, except as provided in paragraph 2 and 4, in no event shall payment be made to a state under this section for medical assistance furnished to an individual unless such individual is A, a resident of one of the 50 states, the District of Columbia, or a territory of the United States, and B, either I, a citizen or national of the United States, II, and an alien lawfully admitted for permanent residence as an immigrant, as defined by sections 101A-15 and 101A-20 of the Immigration and Nationality Act, excluding, among others, alien visitors, tourists, diplomats, and students who enter the United States temporarily with no intention of abandoning their residence in a foreign country. III, an alien who has been granted the status of Cuban and Haitian entrant, as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96-422, or IB, an individual who lawfully resides in the United States in accordance with a compact of a free association referred to in Section 402B2G of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996. B, CHIP, Section 2107E1 of the Social Security Act, as amended by Section 71103B, is further amended. 1, by redesignating subparagraphs R through V as paragraphs V through W, respectively, and 2, by inserting the paragraph Q the following. R, Section 1903V5, relating to payments for medical assistance furnished to aliens, except in relation to payments for services provided under Section 2105A1D II, Sec 71110. Expansion FMAP for certain states providing payments for health care furnished to certain individuals. Section 1905 of the Social Security Act, 42 U.S.C. 1396D is amended 1 in subsection Y. A, in paragraph 1E by inserting or 4 calendar quarters beginning on or after October 1, 2027. In the case such state is a specified state with respect to such calendar quarter 80% after thereafter, and B, in paragraph 2 by adding at the end the following new subparagraph. C, specified state. The term specified state means with respect to a quarter, a state that I, provides any form of financial assistance from a state general fund during such quarter in whole or in part, whether or not made under a state plan or a waiver of such plan, under this title or under another program established by the state to or on behalf of an alien who is not a qualified alien, is not a child or pregnant woman, who is lawfully residing in the United States and eligible for medical assistance pursuant to Section 1903(v)(4), or for child health assistance or pregnancy-related assistance pursuant to Section 2107E(1)(q), for the purchasing of health insurance coverage as defined in Section 2791B(1) of the Public Health Service Act for an alien who is not a qualified alien and is not a child or pregnant woman, or II provides any form of comprehensive health benefits coverage except such coverage required by federal law during such quarter, whether or not under a state plan or waiver of such plan, under this title or under another program established by the state, and regardless of the source of funding for such coverage, to an alien who is not a qualified alien and is not such a child or pregnant woman. D, immigration terms. I, alien. The term alien has the meaning given such term in Section 101A of the Immigration and Nationality Act. II, qualified alien. The term qualified alien has the meaning given such term in Section 431 of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996, except that the references to, in the opinion of the agency providing such benefits in subsection C of such Section 431 shall be treated as references to, in the opinion of the state in which such comprehensive health benefits coverage or such financial assistance is provided as applicable, and to, in subsection Z2. A, in subsection A, by striking for such year and inserting for such quarter, and B, in subparagraph B, I, in the matter preceding subclause I, by striking for year and inserting for calendar quarter in a year, and II, in subclause II, by striking for the year and inserting for the quarter for the state. Sec. 71111, expansion FMAP for emergency Medicaid. Section 1905 of the Social Security Act, 42 U.S.C. 1396D, is amended by adding at the end the following new subsection. KK, FMAP for treatment of an emergency medical condition notwithstanding subsection Y and Z, beginning on October 1, 2026, the federal medical assistance percentage for payments for care and services described in paragraph 2 of subsection 1903V furnished to an alien described in paragraph 1 of such subsection shall not exceed the federal medical assistance percentage determined under subsection B for such state. Subchapter B, preventing wasteful spending. Sec. 71112, moratorium on implementation of rule relating to staffing standards for long-term care facilities under the Medicare and Medicaid programs. The Secretary of Health and Human Services shall not, during the period beginning on the date of the enactment of this section and ending September 30, 2034, implement, administer, or enforce the provisions of the final rule published by the Centers for Medicare and Medicaid Services on May 10, 2024, entitled Medicare and Medicaid Programs, Minimum Staffing Standards for Long-Term Care Facilities, and Medicaid Institutional Programs Transparency Reporting. 89, Fed Reg 40876, and shall not implement, administer, or enforce the amendments made to the following sections of Part 483 of Title 42, Code of Federal Regulations. 1, Section 483.5. 2, Section 483.35. Sec. 71113, reducing state Medicaid costs. A, in general, Section 1902A34 of the Social Security Act, 42 U.S.C. 1396A, A34, is amended to read as follows. 34, provide that in the case of any individual who has been determined to be eligible for medical assistance under the plan and A, is enrolled under paragraph 10A III, such assistance will be made available to the individual for care and services, including under the plan and furnished in or after the month, before the month in which the individual made application or application was made on the individual's behalf, in the case of a deceased individual. For such assistance, if such individual was, or upon application would have been eligible for such assistance at the time such care and services were furnished or B, is not described in subparagraph A. Such assistance will be made available to the individual for care and services, including under the plan and furnished in or after the second month before the month in which the individual made an application or application was made on the individual's behalf in the case of a deceased individual. For such assistance, if such individual was, or upon application, would have been eligible for such assistance at the time such care and services were furnished. B, definition of medical assistance, section 1905A of the Social Security Act, 42 U.S.C. 1396 DA, is amended by striking in or after the third month before the month in which the recipient makes application for assistance and inserting, with respect to an individual described in section 1902A 34A, in or after the month before the month in which the recipient makes application for assistance and with respect to an individual described in section 1902A 34B, in or after the second month before the month in which the recipient makes application for assistance. C, CHIP, section 2102B1B of the Social Security Act, 42 U.S.C. 1397BB, B1B, is amended, 1, in clause IV by striking and at the end. 2, in clause V by striking the period and inserting semicolon and. 3, by adding at the end the following new clause. VI shall, in the case that the state elects to provide child health or pregnancy-related assistance to an individual for any period prior to the month in which the individual made application for such assistance or application was made on behalf of the individual, provide that such assistance is not made available to such individual for items and services included under the state child health plan or waiver of such plan that are furnished before the second month preceding the month in which such individual made application or application was made on behalf of such individual for assistance. D, effective date. The amendments made by this section shall apply to medical assistance, child health assistance, and pregnancy-related assistance with respect to individuals whose eligibility or such assistance, child health assistance, or pregnancy-related assistance is based on an application made on or after the first day of the first quarter that begins after December 31st, 2026. Sec 71114, prohibiting federal Medicaid and CHIP funding for certain items and services. A, Medicaid, section 1903I of the Social Security Act, 42 U.S.C. 1396B1, is amended, 1, in paragraph 26 by striking semi-and or and inserting a semicolon. 2, in paragraph 27 by striking the period at the end and inserting colon or. 3, by inserting paragraph 27, the following new paragraph, 28, with respect to any amount expanded for specified gender transition procedures as defined in section 1905 LL, furnished to an individual enrolled in a state plan or waiver of such plan, and 4, in the flush left matter at the end by striking and 18 and inserting 18 and 28. B, CHIP, section 2107E 1 of the Social Security Act, 42 US 1397 GGE10, as redesignated by section 71103B1A, is amended by striking and 17 and inserting 17 and 28. C, specified gender transition procedures defined. Section 1905, the Social Security Act, 42 U.S.C. 1396D, is amended by adding at the end the following new subsection. LL, specified gender transition procedures. 1, in general, for purposes of section 1903 I-28, except as provided in paragraph 2, the term specified gender transition procedure means, with respect to an individual, any of the following when performed for the purpose of intentionally changing the body of such individual, including by disrupting the body's development, inhibiting its natural functions, or modifying its appearance to no longer correspond to the individual's sex. A, performing any surgery including I, castration, II, sterilization, III, orchiectomy, IV, serotoplasty, V, vasectomy, VI, tubal litigation, VII, hysterectomy, B, tripi, oophorectomy, IX, ovaryectomy, X, medoidoplasty, XI, clitoroplasty, XII, reconstruction of the fixed part of the urethra with or without a medoidoplasty or a phalloplasty, X tripi, penectomy, XIV, phalloplasty, XV, vaginoplasty, XVI, vaginectomy, XVI, vulvoplasty, XV, tripi, reduction, thyrochondroplasty, XIX, chondrolaryngoplasty, XX, mastectomy, and XXI, any plastic, cosmetic, or aesthetic surgery that feminizes or masculinizes the facial or other body features of an individual. B, any placement of chest implants to create feminine breast or any placement of erection or testicle prosthesis. C, any placement of fat or artificial implants in the gluteal region. D, administering, prescribing, or dispensing to an individual medications including I, gonadotropin releasing hormone, GnRH, analogs, or other puberty-blocking drugs to stop or delay normal puberty, and II, testosterone, estrogen, or other androgens to an individual at doses that are supraphysiologic that would normally be produced endogenously in a healthy individual of the same age and sex. 2. Exception. Paragraph 1 shall not apply to the following when furnished to an individual by a healthcare provider if the individual is a minor with consent of such individual's parents with or legal guardian. A. Puberty suppression or blocking prescription drugs for the purpose of normalizing puberty for an individual experiencing precocious puberty. B. Medically necessary procedures or treatments to correct for I. A medically verifiable disorder of sex development, including I-46XX chromosomes with viralization, I-46XY chromosomes with underviralization, and III, both ovarian and testicular tissues. II, sex chromosome structure, sex steroid hormone production of, or sex hormone action if determined to be abnormal by a physician through genetic or biochemical testing. III, infection, disease, injury, or disorder caused or exacerbated by a previous procedure described in paragraph 1, or a physical disorder, physical injury, or physical illness that would, as certified by a physician, place the individual in danger of death or impairment of a major bodily function unless the procedure is performed, not including procedures performed for the alleviation of mental distress, or IV, procedures to restore or reconstruct the body of the individual in order to correspond to the individual's sex after one or more previous procedures described in paragraph 1, which may include the removal of a pseudophallus or breast augmentation. 3. Sex. For purposes of paragraph 1, the term sex means either male or female as biologically determined and defined in paragraphs 4 and 5 respectively. 4. Female. For purposes of paragraph 3, the term female means an individual who naturally has, had, will have, or would have, but for a developmental or genetic anomaly or historical accident, the reproductive system that at some point produces, transports, and utilizes eggs for fertilization. 5. Male. For purposes of paragraph 3, the term male means an individual who naturally has, had, will have, or would have, but for a developmental or genetic anomaly or historical accident, the reproductive system that at some point produces, transports, and utilizes sperm for fertilization. Sec 71115, federal payments to prohibit entities. A, in general. No federal funds that are considered direct spending and provided to carry out a state plan under Title XIX of the Social Security Act or a waiver of such a plan shall be used to make payments to a prohibited entity for items and services furnished during the 1-year period beginning on the date of the enactment of this act, including any payments made directly to the prohibited entity or under a contract or other arrangement between a state and a covered organization. B, definitions in this section. 1, prohibited entity. The term prohibited entity means an entity including its affiliates, subsidiaries, successors, and clinics. A, that as of the first day of the first quarter beginning after the date of enactment of this act, I, as an organization described in section 501c3 of the Internal Revenue Code of 1986 and exempt from tax under section 501a of such code, II, as an essential community provider, described in Section 156.235 of Title 45, Code of Federal Regulations, as in effect on the date of enactment of this Act, that is primarily engaged in family planning services, reproductive health, and related medical care. And III, provides for abortions other than an abortion, I, if the pregnancy is a result of an act of rape or incest, or II, in the case where a woman suffers from a physical disorder, physical injury, or physical illness, including a life-endangering physical condition caused by or arising from the pregnancy itself. That would, as certified by a physician, place the woman in danger of death unless an abortion is performed, and B, for which the total amount of federal and state expenditures under the Medicaid program under Title XIX of the Social Security Act for medical assistance furnished in fiscal year 2023, made directly or by a covered organization to the entity or to any affiliates, subsidiaries, successors, or clinics of the entity, or made to the entity or to any affiliates, subsidiaries, successors, or clinics of the entity as part of a nationwide healthcare provider network, exceeded $800,000. 2, direct spending. The term direct spending has the meaning given the term under Section 250C of the Balanced Budget and Emergency Deficit Control Act of 1985, 2 U.S.C. 900C. 3, covered organization. The term covered organization means a managed care entity as defined in Section 1932A1B of the Social Security Act 42 U.S.C. 1396U to A1B, or a prepaid inpatient health plan or prepaid ambulatory health plan, as such terms are defined in Section 1903 M9D of such Act 42 U.S.C. 1396 M9D. 4, state. The term state has the meaning given such term in Section 1101 of the Social Security Act 42 U.S.C. 1301. Subchapter C, stopping abusive financing practices. Section 71116, sunsetting increased FMAP incentive. Section 1905 II-3 of the Social Security Act 42 U.S.C. 1396D II-3 is amended 1 by striking which has not and inserting the following which. A has not. 2 in subparagraph A as so inserted by striking the period at the end and inserting and. 3 by adding at the end the following new subparagraph. B begins to expend amounts for all such individuals prior to January 1, 2026. Section 71117, provider taxes. A, changes in threshold for hold harmless provisions of broad-based health care related taxes. Section 1903 W4 of the Social Security Act 42 U.S.C. 1396B W4 is amended 1 in subparagraph C II by inserting and for fiscal years beginning on or after October 1, 2026, the applicable percent determined under subparagraph D shall be substituted for 6%. Each place it appears, after each place it appears, and 2, by inserting the subparagraph C II, the following new subparagraph, DI. For purposes of subparagraph C II, the applicable percent determined under this subparagraph is I. In the case of a non-expansive estate and a class of health care items or services described in Section 443.56A of Title 42 Code of Federal Regulations as an effect on May 1, 2025. AA. If on the date of enactment of this subparagraph, the non-expansive state has enacted a tax and imposes such tax on such class, and the Secretary determines that the tax is within the hold harmless health threshold as of that date, the applicable percent of net patient revenue attributable to such class has been so determined, and B, if on the date of enactment of this subparagraph, the non-expansive state has not enacted or does not impose a tax with respect to such class, 0%, and II, in the case of an expansive state and a class of healthcare items or services described in Section 433.56A of Title 42 Code of Federal Regulations as in effect on May 1, 2025, subject to Clause IV. AA, if on the date of enactment of this subparagraph, the expansion state has enacted a tax and imposes such tax on such class, and the Secretary determines that the tax is within the hold harmless threshold as of the date, the lower of AA, the applicable percent of net patient revenue attributable to such class that has been so determined, and BB, the applicable percent specified in Clause II for the fiscal year, and BB, if on the date of enactment of this subparagraph, the expansion state has not enacted or does not impose a tax with respect to such class, 0%. For purposes of Clause II, AABB, the applicable percent is I for fiscal year 2028, 5.5%, II for fiscal year 2029, 5%, III for fiscal year 2030 at 4.5%, IV for fiscal year 2031, 4%, and V for fiscal year 2032 and each subsequent year, 3.5%. III for purposes of Clause I expansion estate. The term expansion state means a state that, beginning on January 1, 2014, or on any date thereafter, elects to provide medical assistance to all individuals described in Section 1902 A10A I V III under the state plan under this title or under a waiver of such plan. II, non-expansion state. The term non-expansion state means a state that is not an expansion state. IV, in the case of a tax of an expansion state in effect on the date of enactment of this clause that applies to a class of healthcare. Items or services that is described in paragraph 3 or 4 of Section 433.56A of Title 42 Code of Federal Regulations as in effect on May 1, 2025, and for which, on such date of enactment, is within the hold harmless threshold as determined by the Secretary, the applicable percent of net patient revenue attributable to such class that has been so determined shall apply for a fiscal year instead of the applicable percent specified in Clause II for the fiscal year. B, non-application to territories. The amendments made by this section shall only apply with respect to a state that is one of the 50 states or the District of Columbia. C, implementation funding. For the purpose of carrying out the provisions of and the amendments made by this section, they are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services, $6 million for fiscal year 2026 to remain available until expended. Sec. 71118, State-Directed Payments, A in general, subject to subsection B, the Secretary of Health and Human Services in this section referred to as the Secretary shall revise Section 438.6 C2 III of Title 42 Code of Federal Regulations for successor regulations such that with respect to a payment described in such section made for a service furnished during a rating period beginning on or after the date of the enactment of this act, the total payment rate for such service is limited to 1, in the case of a state that provides coverage to all individuals described in Section 1902 A10 AI B III of the Social Security Act, 42 U.S.C. 1396 A10 AI B III, that is equivalent to minimum essential coverage as described in Section 5000A F1A of the Internal Revenue Code of 1986, and determined in accordance with standards prescribed by the Secretary in regulations under the state plan or waiver of such plan of such state under Title XIX of such act, 100% of the specified total published Medicare payment rate, or in the absence of a specified total published Medicare payment rate, the payment rate under a Medicaid state plan or under a waiver of such plan, or 2, in the case of a state other than a state described in paragraph 1, 110% of the specified total published Medicare payment rate, or in the absence of a specified total published Medicare payment rate, the payment rate under a Medicaid state plan or under a waiver of such plan. B, grandfathering certain payments in the case of a payment described in Section 438.6 C2 III of Title 42 Code of Federal Regulations or a successor regulation for which written prior approval or a good faith effort to receive such approval as determined by the Secretary was made before May 1, 2025, or a payment described in such section for a rural hospital as defined in subsection D2 for which written prior approval or a good faith effort to receive such approval as determined by the Secretary was made by the date of enactment of this Act. For the rating period occurring within 180 days of the date of the enactment of this Act, beginning with the rating period on or after January 1, 2028, the total amount of such payment shall be reduced by 10% points each year until the total payment rate for such service is equal to the rate for such service specified in subsection A. C, treatment of expansion states. The revisions described in subsection A shall provide that, with respect to a state that begins providing the coverage described in paragraph 1 of such subsection on or after the date of the enactment of this Act, the limitation described in such paragraph shall apply to such state with respect to a payment described in Section 438.6 C2 III of Title 42 Code of Federal Regulations or a successor regulation for a service furnished during a rating period beginning on or after the date of the enactment of this Act. D, definitions in this section. 1, rating speed. Rating period. The term rating period has the meaning given such term in Section 438.2 of Title 42 Code of Federal Regulations or a successor regulation. 2, rural hospital. The term rural hospital means the following. A subsection D, hospital, as defined in paragraph 1B of Section 1886D, that I is located in a rural area as defined in paragraph 2D of such section. II is treated as being located in a rural area pursuant to paragraph 8E of such section, or III is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Fed Reg 6725. B, a critical access hospital as defined in Section 1861 MM1. C, a sole community hospital as defined in Section 1886D 5D III. D, a Medicare dependent small rural hospital as defined in Section 1886D 5G IV. E, a low volume hospital as defined in Section 1886D 12C. F, a rural emergency hospital as defined in Section 1861 K2. 3, state. The term state means one of the 50 states or the District of Columbia. 4. Total published Medicare payment rate. The term total published Medicare payment rate means amounts calculated as payment for specified services, including the service furnished, that have been developed under Part A or Part B of the Title XVIII of the Social Security Act, 42 U.S.C. 1395 et seq. 5. Written prior approval. The term written prior approval has the meaning given such term in Section 438.6C2I of Title 42 Code of Federal Regulations or a successor regulation. E, funding. There are appropriated out of any monies in the Treasury not otherwise appropriated $7 million for each of fiscal years 2026 through 2033 for purposes of carrying out this section to remain available until expended. Sec. 71119. Requirements regarding waiver of uniform tax requirement for Medicaid provider tax. A, in general, Section 1903W of the Social Security Act, 42 U.S.C. 1396W is amended. 1, in paragraph 3E, by inserting after clause II, the following new clause. III, for purposes of clause III, a tax is not considered to be generally redistributive if any of the following conditions apply. I, within a permissible class, the tax rate imposed on any taxpayer or tax rate group as defined in paragraph 7J, explicitly defined by its relatively lower volume or percentage of Medicaid taxable units as defined in paragraph 7H, is lower than the tax rate imposed on any other taxpayer or the tax rate group explicitly defined by its relatively higher volume or percentage of Medicaid taxable units.
2, within a permissible class, the tax rate imposed on any taxpayer or tax rate group as so defined based upon its Medicaid taxable units as so defined is higher than the tax rate imposed on any taxpayer or tax rate group based upon its non-Medicaid taxable unit as defined in paragraph 7.1. 3, the tax excludes or imposes a lower tax rate on any taxpayer or tax rate group as so defined based on or defined by any description that results in the same effect as described in subclause 1 or 2 for a taxpayer or tax rate group. Characteristics that may indicate such type of exclusion include the use of terminology to establish a tax rate group. AA, based on payments or expenditures made under the program under this title without mentioning the term Medicaid or any similar term to accomplish the same effect as described in subclause 1 or 2, or BB, that closely approximates a taxpayer or tax rate group under the program under this title to the same effect and is described in subclause 1 or 2, and 2 in paragraph 7 by adding at the end the following new subparagraphs. H, the term Medicaid taxable unit means a unit that is being taxed within a health care related tax that is applicable to the program under this title. Such term includes a unit that is used as the basis for 1, payment under the program under this title, such as Medicaid bed days. 2, Medicaid revenue. 3, costs associated with the program under this title, such as Medicaid charges, claims, or expenditures. And 4, other units associated with the program under this title as determined by the Secretary. 1, the term non-Medicaid taxable unit means a unit that is being taxed within a health care related tax that is not applicable to the program under this title. Such term includes a unit that is used as the basis for 1, payment by non-Medicaid payers, such as non-Medicaid bed days. 2, non-Medicaid revenue. 3, costs that are not associated with the program under this title, such as non-Medicaid charges, non-Medicaid claims, or non-Medicaid expenditures. And 4, other units not associated with the program under this title as determined by the Secretary. J, the term tax rate group means a group of entities contained within a permissible class of a health care-related tax that are taxed at the same rate. B, non-application to territories. The amendments made by this section shall only apply with respect to the state that is one of 50 states or the District of Columbia. C, effective date. The amendments made by this section shall take effect upon the date of enactment of this act, subject to any applicable transition period determined appropriate by the Secretary of Health and Human Services, not to exceed 3 fiscal years. Section 71120, requiring budget neutrality for Medicaid demonstration projects under Section 1115. A, in general, Section 1115 of the Social Security Act, 42 U.S.C. 1315, is amended by adding at the end the following new subsection. G, requirement of budget neutrality for Medicaid demonstration projects. 1, in general, beginning January 1st, 2027, the Secretary may not approve an application for, or renewal or amendment of, an experimental, pilot, or demonstration project undertaken under subsection A to promote the objectives of Title 19 in a state in this subsection referred to as Medicaid demonstration project unless the chief actuary for the Centers for Medicare and Medicaid Services certifies that such project, based on expenditures for the state program in the preceding fiscal year, or in the case of a renewal, the duration of the preceding waiver, is not expected to result in an increase in the amount of federal expenditures compared to the amount that such expenditures would otherwise be in the absence of such project. For purposes of this subsection, expenditures for the coverage of populations and services that the state could have otherwise provided through its Medicaid, state plan, or other authority under Title 19, including expenditures that could be made under such authority, but for the provision of such services at a different site of service than authorized under such state plan or other authority, shall be considered expenditures in the absence of such a project. 2. Treatment of savings. In the event of that expenditures with respect to a state under a Medicaid demonstration project are, during an approval period for such project, less than the amount of such expenditures that would have otherwise been made in the absence of such project, the Secretary shall specify the methodology to be used with respect to the subsequent approval period for such project for purposes of taking the difference between such expenditures into account. Implementation funding. For the purposes of carrying out the provisions of and the amendments made by this section, they are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services $5 million for each of fiscal years 2026 and 2027 to remain available until expended. Subchapter D, Increasing Personal Accountability. Section 71121, Requirement for states to establish Medicaid community engagement requirements for certain individuals. A. In general, Section 1902 of the Social Security Act, 42 U.S.C. 1396A, as amended by Section 71103 and 71104, in further amended by adding at the end of the following new subsection. 20. Community engagement requirement for applicable individuals. 1. In general, except as provided in paragraph 11, beginning not later than the first day of the first quarter that begins after December 30th, 2026, or at the option of the state under a waiver or demonstration project under Section 1115 of the state plan, such earlier date as the state may specify, subject to the succeeding provisions of this subject, a state shall provide, as a condition of eligibility for medical assistance for an applicable individual, that such individual is required to demonstrate community engagement under paragraph 2. A. In the case of an applicable individual who has filed an application for medical assistance under a state plan or a waiver of such plan under this title for one or more but not more than 3, as specified by the state, consecutive months immediately preceding the months during which such individual applies for such medical assistance, and B. In the case of an applicable individual enrolled and receiving medical assistance under a state plan or under a waiver of such plan under this title for one or more, as specified by the state months, whether or not consecutive. 1. During the period between such individual's most recent determination or redetermination as applicable of eligibility and such individual's next regularly scheduled redetermination of eligibility, as verified by the state as part of such regularly scheduled redetermination of eligibility, or 2, in the case of a state that has elected under paragraph 4 to conduct more frequent verifications of compliance with the requirement to demonstrate community engagement during this period between the most recent and next such verification with respect to such individual. 2. Community engagement compliance described. Subject to paragraph 3, an applicable individual demonstrates a community engagement under this paragraph for a month if such individual meets one or more of the following conditions with respect to such month, as determined in accordance with criteria established by the Secretary through regulation. A. The individual works not less than 80 hours. B. The individual completes not less than 80 hours of community service. C. The individual participates in a work program for not less than 80 hours. D. The individual is enrolled in an educational program at least half-time. E. The individual engages in any combination of the activities described in subparagraphs A through D for a total of not less than 80 hours. F. The individual has a monthly income that is not less than the applicable minimum wage standard under Section 6 of the Fair Labor Standards Act of 1938, multiplied by 80 hours. G. The individual had an average monthly income over the preceding 6 months that is not less than the applicable minimum wage requirement under Section 6 of the Fair Labor Standards Act of 1938, multiplied by 80 hours, and is a seasonal worker, as described in Section 45RD5B of the Internal Revenue Code of 1986. 3. Exceptions. A. Mandatory exception for certain individuals. The state shall deem an applicable individual to have demonstrated community engagement under paragraph 2 for a month and may elect to not require an individual to verify information resulting in such, deeming if, 1, for part of all such month, the individual, 1, was a specified excluded individual as defined in paragraph 9A2, or 2, was AA under the age of 19, BB entitled to or enrolled for benefits under Part A of Title XVIII or enrolled for benefits under Part B of Title XVIII or CC described in any of subclasses 1 through 7 of subsection A10A1, or 2, at any point during the 3-month period ending on the first day of such month, the individual was an inmate of a public institution. B. Optional exception for short-term hardship events. 1. In general, the state plan or waiver of such plan may provide, in the case of an applicable individual who experiences a short-term hardship event during a month, that the state shall, under procedures established by the state in accordance with standards specified for the Secretary, in the case of a short-term hardship event described in Clause 2.2, and upon the request of such individual, a short-term hardship event described in subclause 1 or 3 of Clause 2, deem such individual to have demonstrated community engagement under paragraph 2 for such month. 2. Short-term hardship event defined. For purposes of this subparagraph, an applicable individual experiences a short-term hardship event during a month if, for part or all of such month, 1, such individual receives inpatient hospital services, nursing facility services, services in an intermediate care facility for individuals with intellectual disabilities, inpatient psychiatric hospital services, or such other services of similar acuity, including outpatient care relating to other services specified in this subclause, as the Secretary determines appropriate. 2. Such individual resides in a county or equivalent unit of local government, AA, in which there exists an emergency or disaster declared by the President pursuant to the National Emergencies Act or the Robert T. Stafford Disaster Relief and Emergency Assistance Act, or BV, that subject to the request from the state to the Secretary, made in such form at such time and containing such information as the Secretary may require, has an employment rate that is at or above the lesser of AA 8% or BB 1.5 times the national unemployment rate, or 3. Such individual or their dependent must travel outside of their community for an extended period of time to receive medical services necessary to treat a serious or complex medical condition as described in paragraph 9A2VEE that are not available within their community of residence. 4. Option to conduct more frequent compliance verifications. With respect to an applicable individual enrolled in receiving medical assistance under a state plan or a waiver of such plan under this title, the state shall verify, in accordance with procedures specified by the Secretary, that each such individual has met the requirement to demonstrate community engagement under paragraph 1 during each such individual's regularly scheduled redetermination of eligibility, except that a state may provide for such verifications more frequently. 5. Ex parte verifications. For purposes of verifying that an applicable individual has met the requirement to demonstrate community engagement under paragraph 1 or determining such individual to be deemed to have demonstrated community engagement under paragraph 3, or that an individual is a specified excluded individual under paragraph 9A2, the state shall, in accordance with standards established by the Secretary, establish processes and use reliable information available to the state, such as payroll data or payments or encounter data under this title for individuals and data on payments to such individuals for the provision of services covered under this title, without requiring, where possible, the applicable individual to submit additional information. 6. Procedure in the case of noncompliance. A. In general, if a state is unable to verify that an applicable individual has met the requirement to demonstrate community engagement under paragraph 1, including, if applicable, by verifying that such individual was deemed to have demonstrated community engagement under paragraph 3, the state shall, in accordance with standards specified by the Secretary, 1. Provide such individual with the notice of noncompliance described in subparagraph B. 2. 1. Provide such individual with a period of 30 calendar days beginning on the date on which such notice of noncompliance is received by the individual. 2. AA. Make a satisfactory showing to the state of compliance with such requirement, including, if applicable, by showing that such individual was or should be deemed to have demonstrated community engagement under paragraph 3, or BB, make a satisfactory showing to the state that such requirement does not apply to such individual on the basis that such individual does not meet the definition of applicable individual under 9A, paragraph 9A, and 2, if such individual is enrolled under the state plan or a waiver of such plan under this title, continue to provide such individual with medical assistance during such 30-day calendar period, and 3, if no such satisfactory showing is made and the individual is not a specified excluded individual described in paragraph 9A2, deny such individual's application for medical assistance under the state plan or waiver of such plan, or, as applicable, disenroll such individual from the plan or waiver of such plan not later than the end of the month following the month in which such 30 calendar day period ends, provided that 1. The state first determines whether, with respect to the individual, there is any other basis for eligibility for medical assistance under the state plan or waiver of such plan, or for another insurance affordability program. And 2. The individual is provided written notice and granted an opportunity for a fair hearing in accordance with subsection A3. B. Notice. The notice of noncompliance provided to an applicable individual under the paragraph A1 shall include information in accordance with standards specified by the Secretary on 1. How such individual may make a satisfactory showing of compliance with such requirement as described in subparagraph A2, or make a satisfactory showing that such requirement does not apply to such individual on the basis that such individual does not meet the definition of applicable individual under paragraph 9A, and 2, how such individual may reapply for medical assistance under the state plan or a waiver of such plan under this title in the case that such individual's application is denied, or as applicable in the case of such individual is disenrolled from the plan or waiver. Treatment of noncompliant individuals in relation to certain other provisions. A. Certain FMAP increases. A state shall not be treated as not providing medical assistance to all individuals described in section 1902A10A18, or as not expending amounts for all such individuals under the state plan or waiver of such plan solely because such an individual is determined ineligible for medical assistance under the state plan or waiver on the basis of failure to meet requirements to demonstrate community engagement under paragraph 1. B. Other provisions. For purposes of section 36BC2B of the Internal Revenue Code of 1986, an individual shall be deemed to be eligible for minimum essential coverage described in section 5000AF1A2 of such code for a month if such individual would have been eligible for medical assistance under a state plan or a waiver of such plan under this title, but for a failure to meet the requirement to demonstrate community engagement under paragraph 1. 8. Outreach. A. In general, in accordance with standards specified by the Secretary beginning not later than the date that precedes December 31st, 2026, or if the state elects under paragraph 1 to specify an earlier date, such earlier date by the number of months specified by the state under paragraph 1A plus 3 months, and periodically thereafter, the state shall notify applicable individuals enrolled under a state plan or waiver that this title, the requirement to demonstrate community engagement under the subsection. Such notice shall include information on 1. How to comply with such requirement, including an explanation of the exceptions to such requirement under paragraph 3, and the definition of the term applicable individual under paragraph 9A. 2. The consequences of noncompliance with such requirement, and 3. How to report to the state any change in the individual status that could result in 1. The applicability of an exception under paragraph 3, or the end of the applicability of such an exception, or 2. The individual qualifying as a specified excluded individual under paragraph 9A2. B. Form of outreach notice. A notice required under subparagraph A shall be delivered, 1. By regular mail, or if elected by the individual, to an electronic format, and 2. In 1 or more additional forms, which may include telephone, text message, an internet website, other commonly available electronic means, and such other forms as the Secretary determines appropriate. 9. Definitions in this subsection. A. Applicable individual. In general, the term applicable individual means an individual other than a specified excluded individual as defined in Clause 2. 1. Who is eligible to enroll or is enrolled under the state plan under subsection A10, A18, or 2. Who AA is otherwise eligible to enroll or is enrolled under a waiver of such plan that provides coverage that is equivalent to minimum essential coverage as described in section 5000 AF1A of the Internal Revenue Code of 1986, and as determined in accordance with standards prescribed by the Secretary and regulations. And BB has attained the age of 19 and is under 65 years of age, is not pregnant, is not entitled to or enrolled for benefits under Part A of Title 18, or enrolled for benefits under Part B of Title 18, and is not otherwise eligible to enroll under such plan. 2. Specified excluded individual. For purposes of Clause 1, the term specified excluded individual means an individual as determined by the state in accordance with standards specified by the Secretary. 1. Who is described in subsection A10A19. 2. Who AA is an Indian or an urban Indian, as such terms are defined in paragraphs 13 and 28 of Section 4 of the Indian Healthcare Improvement Act. BB is a California Indian described in sections 809A of such act, or CC, has otherwise been determined eligible as an Indian for the Indian Health Service under regulations promulgated by the Secretary. 3. Who is the parent, guardian, caretaker, relative, or family caregiver as defined in Section 2 of the Raise Family Caregivers Act of a dependent child 13 years of age and under, or a disabled individual. 4. Who is a veteran with a disability rated as total under Section 1155 of Title 38 United States Code. 5. Who is medically frail or otherwise has special medical needs as defined by the Secretary, including an individual, AA, who is blind or disabled, as defined in Section 1614. BB, with a substance use disorder. CC, with a disabling mental disorder. DD, with a physical, intellectual, or developmental disability that significantly impairs their ability to perform one or more of the activities of daily living, or EE, with a serious or complex medical condition. 6. Who AA is in compliance with any requirements imposed by the state pursuant to Section 407, or BB is a member of a household that receives supplemental nutrition assistance program benefits under the Food and Nutrition Act of 2008 and is not exempt from a work requirement under such act. 7. Who is participating in a drug addiction or alcoholic treatment and rehabilitation program as defined in Section 3H of the Food and Nutrition Act of 2008. 8. Who is an inmate of a public institution. Or 9. Who is pregnant or entitled to postpartum medical assistance under paragraph 5 or 16 of subsection E. B. Educational program. The term educational program includes 1. An institution of higher education as defined in Section 101 of the Higher Education Act of 1965, and 2. A program of career and technical education as defined in Section 3 of the Carl D. Perkins Career and Technical Education Act of 2006. C. State. The term state means one of the 50 states or the District of Columbia. D. Work program. The term work program has the meaning given such term in Section 601 of the Food and Nutrition Act of 2008. 10. Prohibiting waiver of community engagement requirements. Notwithstanding Section 1115A, the provisions of this subsection may not be waived. 11. Special implementation rule. A. In general, subject to subparagraph C, the Secretary may exempt a state from compliance with the requirements of this subsection if 1. The state submits to the Secretary a request for such exemption made in such form and at such time as the Secretary may require, and including the information specified in subparagraph B. And 2, the Secretary determines that based on such request, the state is demonstrating a good faith effort to comply with the requirements of this subsection. B, good faith effort determination. In determining whether a state is demonstrating a good faith effort for purposes of subparagraph A2, the Secretary shall consider 1. Any actions taken by the state toward compliance with the requirements of this subsection. 2. Any significant barriers to or challenges in meeting such requirements, including related to funding, design, development, procurement, or installation of necessary systems or resources. 3. The state's detailed plan and timeline for achieving full compliance with such requirements, including any milestones of such plan as defined by the Secretary. And 4. Any other criteria determined appropriate by the Secretary. C. Duration of exemption. 1. In general, an exemption granted under subparagraph A shall expire not later than December 31st, 2028, and may not be renewed beyond such date. 2. Early termination. The Secretary may terminate an exemption granted under subparagraph A prior to the expiration date of such exemption if the Secretary determined that the state has 1. Failed to comply with the reporting requirements described in subparagraph D, or 2. Based on the information provided pursuant to subparagraph D, failed to make continued good faith efforts toward compliance with the requirements of this subsection. D. Reporting requirements. A state granted an exemption under subparagraph A shall submit to the Secretary 1. Quarterly progress reports on the state's status in achieving the milestones toward full compliance described in subsection B3, and 2. Information on specific risks or newly identified barriers or challenges to full compliance, including the state's plan to mitigate such risks, barriers, or challenges. B. Conforming amendment, Section 1902A10A18 of the Social Security Act, 42 U.S.C. 1396 AA10A18 is amended by striking subject to subsection K and inserting subject to subsection K and XX. C. Prohibiting conflicts of interest. A state shall not use a Medicaid managed care entity or other specified entity as such terms are defined in Section 1903 M9D or other contractor to determine beneficiary compliance under such section unless the contractor has no direct or indirect financial relationship with any Medicaid managed care entity or other specified entity that is responsible for providing or arranging for coverage of medical assistance for individuals enrolled with the entity pursuant to a contract with such state. D, interim final rulemaking. Not later than June 1st, 2026, the Secretary of Health and Human Services shall promulgate an interim final rule for purposes of implementing the provisions of and the amendments made by this section. Any action taken to implement the provisions of and the amendments made by this section shall not be subject to the provisions of Section 553 of Title V United States Code. E, development of government efficiency grants to states. 1, in general, in order for states to establish systems necessary to carry out the provisions of and amendments made by this section or other sections of this chapter that pertain to conducting eligibility determinations or redeterminations, the Secretary of Health and Human Services shall A, out of the amount appropriated under paragraph 3A, award to each state a grant equal to the amount specified in paragraph 2 for such state, and B, out of amounts appropriated under paragraph 3B, distribute an equal amount among such states. 2, amounts specified. For purposes of paragraph 1A, the amount specified in this paragraph is an amount that bears the same ratio to the amount appropriated under paragraph 3A as the number of applicable individuals, as defined in Section 1902 XX of the Social Security Act, as added by subsection A, residing in such states bear to the total number of such individuals residing in all states as of March 31st, 2025. Funding. There are appropriated out of any monies in the Treasury not otherwise appropriated $100 billion for fiscal year 2026 for purposes of awarding grants under paragraph 1A to remain available until expended, and B, $100 million for fiscal year 2026 for purposes of awards grants under paragraph 1B to remain available until expended. For definition, in this subsection, the term state means one of the 50 states and the District of Columbia. F, implementation funding for the purposes of carrying out the provisions of and the amendments made by this section. They are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services, $15 million for fiscal year 2026 to remain available until expended. Section 71122, modifying cost-sharing requirements for certain expansion individuals under the Medicaid program. A, in general, Section 1916 of the Social Security Act, 42 U.S.C. 1396-0 is amended, 1, in subsection A, in the matter preceding paragraph 1, by inserting, other than beginning October 1st, 2028, specified individuals as defined in subsection K3. After individuals, and 2, by adding at the end of the following new subsection K, special rules for certain expansion individuals. 1, premiums. Beginning October 1st, 2028, the state plan shall provide that in the case of a specified individual as defined in paragraph 3, who is eligible under the plan, no enrollment fee, premium, or similar charge will be imposed under the plan. 2, required imposition of cost sharing. A, in general, subject to subparagraph B, the subsection J, in the case of a specified individual, the state plan shall, beginning October 1st, 2028, provide for the imposition of such deductions, cost sharing, or similar charges determined appropriate by the state, in an amount greater than $0 with respect to certain care items or services furnished to such an individual as determined by the state. B, limitations. 1, exclusion of certain services. In no case may a deduction, cost sharing, or similar charge be imposed under the state plan with respect to care items or services described in any of the subparagraphs B through J of subsection A2 or any primary care services, mental health services, substance use disorder services, or services provided by a federally qualified health center. As defined in 1905-12, certified community behavioral health clinic as defined in section 1905-JJ2, or rural health clinic as defined in 1905-11, furnished to a specified individual. 2, item and service limitation. 1, in general, except as provided in subclause 2, in no case may a deduction, cost sharing, or similar charge imposed under the state plan with respect to care or an item or service furnished to a specified individual exceed $35. 2, special rules for prescription drugs. In no case may a deduction, cost sharing, or similar charge imposed under the state plan with respect to the prescription drug furnished to a specified individual exceed the limit that would be applicable under paragraph 2A1 or 2B of section 1916AC with respect to such drug and individual if such drug so furnished were subject to cost sharing under such section. 3, maximum limit on cost sharing. The total aggregate amount of deductions, cost sharing, or similar charges imposed under the state plan for all individuals in the family may not exceed 5% of the family income of the family involved, as applied on a quarterly or monthly basis as specified by the state. C, cases of non-payment, notwithstanding subsection E, a state may permit a provider participating under the state plan to require as a condition for the provision of care, items, or services to a specified individual entitled to medical assistance under this title for such care, items, or services, the payment of any deductions, cost sharing, or similar charges authorized to be imposed with respect to such care, items, or services. Nothing in this subparagraph shall be construed as preventing a provider from reducing or waiving the application of such deductions, cost sharing, or similar charges on a case-by-case basis. 3, specified individual defined. For purposes of this subsection, the term specified individual means an individual who has a family income as determined in accordance with Section 1902E14 that exceeds the poverty line as defined in Section 2110C5, applicable to a family of the size involved, and A, is enrolled under Section 1902A10A18, or B,
B is described in such subsection and otherwise enrolled under a waiver of the state plan that provides coverage that is equivalent to minimum essential coverage as described in Section 5000A F1A of the Internal Revenue Code of 1986 and determined in accordance with standards prescribed by the Secretary and regulations to all individuals described in Section 1902A10A18. 4, state defined. For purposes of the subsection, the term state defined means one of the 50 states or the District of Columbia. B, conforming amendments. 1, required applications. Section 1902A14 of the Social Security Act, 42 U.S.C. 1396A, A14, is amended by inserting and provide for imposition of such deductions, cost sharing, or similar charges for care, items, or services furnished to specific individuals as defined in paragraph 3 of section 1916K, in accordance with paragraph 2 of such section after section 1916. 2, non-applicability of alternative cost sharing. Section 1916A1 of the Social Security Act, 42 U.S.C. 1396-01A1, is amended in the second sentence by striking or J and inserting J or K. Subchapter E, expanding access to care, Section 71123, making certain adjustments to coverage of home or community-based services under Medicaid. A, expanding HCBS coverage under Section 1915C waivers. Section 1915C of the Social Security Act, 42 U.S.C. 1396N-C, is amended, 1, in paragraph 3 by inserting paragraph 11 or before subsection H2, and 2, by adding at the end of the following new paragraph, 11, expanding coverage for home or community-based services. A, in general, beginning July 1st, 2028, notwithstanding paragraph 1, the Secretary may approve a waiver that is a standalone from any other waiver approved under the subsection to include as medical assistance under the state plan of such state payment for part or all part of the cost of home or community-based services other than room and board, as described in paragraph 1, approved by the Secretary, which are provided pursuant to a written plan of care to individuals described in some paragraph B3. A waiver approved under this paragraph shall be for an initial term of 3 years and, upon the request of the state, shall be extended for additional 5-year periods unless the Secretary determines that the previous waiver period, the requirements specified under this subsection, excluding those accepted under subparagraph B, have not been met. B, state requirements. In addition to the requirements specified under the subsection, except for the requirements described in some paragraphs C and D of paragraph 2, and any other requirements specified under the subsection that the Secretary determines to be inapplicable to the context of a waiver that does not require individuals to have a determination described in paragraph 1, a state shall meet the following requirements as a condition of waiver approval.
1, as the date that such request a waiver, this subsection to provide home or community-based services to individuals scheduled in Clause 3, all other waivers, if any, granted under this subsection to such state meet the requirements of this subsection. 2, the state demonstrates to the Secretary that approval of a waiver under the subsection with respect to individuals described in Clause 3 will not result in a material increase of the average amount of time that individuals with respect to whom a determination described in paragraph 1 has been made will need to wait to receive home or community-based services under any other waiver granted under this subsection as determined by the Secretary. 3, the state establishes needs-based criteria subject to the approval of the Secretary regarding who will be eligible for home or community-based services under a waiver approved by this paragraph without requiring such individual to have a determination described in paragraph 1 and specifies the home or community-based services such individuals are so eligible will receive. 4, the state establishes needs-based criteria for determining whether an individual described in Clause 3 requires a level of care provided in a hospital, nursing facility, or in an intermediate care facility for individuals with developmental disabilities under the state plan or under any waiver of such plan that are more stringent than the needs-based criteria established under Clause 3 for determining eligibility for home or community-based services. 5, the state attests that the state's average per capita expenditure for medical assistance under the state plan or waiver of such plan, provided with respect to such individuals enrolled in a waiver under this paragraph, will not exceed the state's average per capita expenditure for medical assistance for individuals receiving institutional care under the state plan or waiver of such plan for the duration that the waiver under this paragraph is in effect. 6, the state provides to the Secretary data in such form and manner as the Secretary may specify regarding the number of individuals described in Clause 3 with respect to a state seeking approval of a waiver under the subsection, to whom the state will make such services available under such waiver. 7, the state agrees to provide to the Secretary, not less frequently than annually, data for purposes of paragraph 2E in such form and manner as the Secretary may specify regarding with respect to each preceding year in which a waiver under this subsection to provide home or community-based services to individuals described in Clause 3 was in effect. 1, the cost of such terms defined by the Secretary of such services furnished to individuals described in Clause 3, broken down by type of service. 2, with respect to each type of home or community-based service provided under the waiver, the length of time that such individuals have received such service. 3, a comparison between the data described in subclause 1 and any comparable data available with respect to individuals with respect to with a determination described in paragraph 1 has been made, and with respect to individuals receiving institutional care under this title. And 4, the number of individuals who have received home or community-based services under the waiver during this preceding year. C, limitation on payments. No payments made to carry out this paragraph shall be used to make payments to a third party on behalf of an individual practitioner for benefits such as health insurance, skills training, and other benefits customary for employees in the case of a class of practitioners for which the program established under this title is the primary source of revenue. B, implementation funding. 1, in general, there are appropriated out of any monies in the Treasury not otherwise appropriated to the Secretary of Health and Human Services. A, for fiscal year 2026, $50 million for purposes of carrying out the provisions of and the amendments made by this section to remain available until expended. And B, for fiscal year 2027, $100 million for purposes of making payments to states, subject to paragraph 2, to support state systems to deliver home or community-based services under section 1915C of the Social Security Act, 42 U.S.C. 1396 NC, as amended by this section, to remain available until expended. 2, payments based on the state HCBS eligible population. Payments to states from the amounts made available by paragraph 1B shall be made with respect to a state on the basis of the proportion of the population of the state that is eligible for home or community-based services under section 1915C of the Social Security Act, 42 U.S.C. 1396 NC, as amended by the section, as compared to all states. Section 71124, determination of FMAP for high poverty states. Section 1905B of the Social Security Act, 42 U.S.C. 1396D, is amended in the first sentence, 1, by striking and 6 and inserting 6, and 2, by inserting before the period the following, comma, and 7, only for purposes of payments for medical assistance under this title, excluding any such payments that are based on the enhanced FMAP described in Section 2105B in the case of a state for which the Secretary issues under the authority of Section 673(2) of the Omnibus Budget Reconciliation Act of 1981, a separate poverty guidance for any calendar year occurring during or after the date of enactment of this clause that is higher than the poverty guideline issued by the Secretary for such calendar year that is applicable to the majority of the states. The regular federal medical assistance percentage determined for such a state under this subsection without regard to any adjustments to such percentage for the first fiscal year quarter that begins after such date of enactment and for each fiscal year quarter beginning thereafter shall be increased after such determination but prior to any increase which may be applicable and in no case to exceed 100% by the case of the state with the highest separate poverty guideline for the calendar year, 25% of the average regular federal medical assistance percentage determined without regard to any adjustments to such percentage for the fiscal year for states which do not have a separate poverty guideline issued for them for such calendar year, and in the case of the state with the second highest separate poverty guideline for the calendar year, 15% of the average regular federal medical assistance percentage determined without regard to any adjustments to such percentage. For the fiscal year for states which do not have a separate poverty guideline issued for them for such calendar year. Chapter 2, Medicare. Subchapter A, strengthening eligibility requirements. Section 71201, limiting Medicare coverage of certain individuals. Title 18 of the Social Security Act, 42 U.S.C. 1395 et sec, is amended by adding at the end of the following new section. Section 1899C, limiting Medicare coverage of certain individuals. A, in general, subject to subsection B, an individual may be entitled to or enrolled for benefits under this title only if the individual is 1, a citizen or national of the United States, 2, an alien who is lawfully admitted for permanent residence under the Immigration and Nationality Act, 3, an alien who has been granted the status of Cuban and Haitian entrant as defined in Section 501(c)(e) of the Refugee Education Assistance Act of 1980, Public Law 96-422, or 4, an individual who lawfully resides in the United States in accordance with the Compact of Free Association referred to in Section 402(b)(2)(g) of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996. B, application to individuals currently entitled to or enrolled for benefits. 1, in general, in the case of an individual who is entitled for or enrolled for benefits under this title as of the date of the enactment of this section, subsection A shall apply beginning on the date that is 18 months after such date of enactment. 2, review by Commissioner or Social Security. A, in general, not later than 1 year after the date of the enactment of this section, the Commissioner of Social Security shall complete a review of individuals entitled to or enrolled for benefits under this title of such date of enactment for purposes of identifying individuals not described in any of the paragraphs 1 through 4 of subsection A. B, notice. The Commissioner of Social Security shall notify each individual identified under the review conducted under subparagraph A that such individual's entitlement to or enrollment for benefits under this title will be terminated as of the date that is 18 months after the date of the enactment of the section. Such notification shall be made as soon as practical after such identification and in the manner designed to ensure such individual's comprehension of such notification. Subchapter B, improving services for seniors, Section 71202, temporary payment increase under the Medicare physical fee schedule to account for exceptional circumstances. A, in general, Section 1848 T1 of the Social Security Act, 42 U.S.C. 1395 W4 T1 is amended. 1, in the matter preceding subparagraph A by striking and 2024 and inserting 2024 and 2026. 2, in subparagraph D by striking and at the end 3, in subparagraph E, by striking the period at the end and inserting semicolon and 4, by adding at the end of the new subparagraph F, such services furnished on or after January 1, 2026, and before January 1, 2027 by 2.5%. B, conforming amendment, Section 1848C2B45 of the Social Security Act, 42 U.S.C. 1395 W4C2B45, is amended by striking or 2024 and inserting 2024 or 2026. Section 71203, expanding and clarifying the exclusion for orphan drugs under the Drug Price Negotiation Program. A, in general, Section 1192E of the Social Security Act, 42 U.S.C. 1320 F1E is amended. 1, in paragraph 1, in the matter preceding subparagraph A, by striking and 3 and inserting through 4. 2, in paragraph 3A, by striking only one rare disease or condition and inserting one or more rare disease or conditions, and B, by striking such rare disease or condition and inserting one or more such rare diseases or conditions as such term is defined in Section 526A2 of the Federal Food, Drug, and Cosmetic Act, and 3, by adding at the end of the following new paragraph. 4, treatment of former orphan drugs. In the case of a drug or biological product that, as of the date of approval or licensure of such drug or biological product, is a drug or biological product described in paragraph 3A, paragraph 1A2, or 1B2 as applicable, shall apply as if the reference to the date of such approval or the date of such licensure, respectively, were instead a reference to the first day after the date of such approval for which such drug is not a drug described in paragraph 3A, or the first day after the date of such licensure for which such biological product is not a biological product described in paragraph 3A, respectively. B, application. The amendments made by subsection A shall apply with respect to initial price applicability years as defined in Section 1191B of the Social Security Act, 42 U.S.C. 1320 FB, beginning on or after July 1st, 2028. Section 71204, application of cost of living adjustment to non-labor related portion for hospital outpatient department services furnished in Alaska and Hawaii. Section 1833T of the Social Security Act, 42 U.S.C. 1395 LT, is amended by adding at the end the following new paragraph. 23, application of cost of living adjustment to non-labor related portion for hospital outpatient department services furnished in Alaska and Hawaii. A, in general, with respect to OPD services furnished on or after January 1st, 2027, the Secretary shall provide for adjustments to the payment amounts under the subsection for such services in the same manner that is provided under Section 1886D5H with respect to the application of the cost of living adjustment to the non-labor related portion of such payment amounts to take into account the unique circumstances of hospitals located in Alaska or Hawaii. Such adjustments shall not apply to payment amounts for a separately payable drug, biological, or medical device. B, application without regard to budget neutrality. Adjustments to payment amounts made under this paragraph. 1, shall not be considered an adjustment under paragraph 2E, and 2, shall not be implemented in a budget neutral manner. Chapter 3, Health Tax. Subchapter A, Improving Eligibility Criteria. Section 71301, Permitting Premium Tax Credit only for certain individuals. A, in general, Section 36BE1 is amended by inserting or in the case of aliens who are lawfully present are not eligible aliens, after individuals who are not lawfully present. B, eligible aliens. Section 36BE2 is amended. 1, by striking for purposes of this section an individual and inserting for purposes of this section, A, in general, an individual, and 2, by adding at the end of the following new subparagraph, B, eligible aliens. An individual who is an alien and lawfully present shall be treated as an eligible alien if such individual is and is reasonably expected to be for the entire period of enrollment for which the credit under this section is being claimed. 1, an alien who is lawfully admitted for permanent residence under the Immigration and Nationality Act, 8 U.S.C. 1101 et sec. 2, an alien who has been granted the status of Cuban and Haitian entrant as defined in Section 501E of the Refugee Education Assistance Act of 1980, Public Law 96-422, or 3, an individual who lawfully resides in the United States in accordance with the Compact of Free Association referred to in Section 402B2G of the Personal Responsibility and Work Opportunity Reconciliation Act of 1996, 8 U.S.C. 1612B2G. C. Conforming amendments. 1. Verification of information. Section 1411 of the Patient Protection and Affordable Care Act, 14 U.S.C. 18081 is amended. A. In subsection A, 1, in paragraph 1 by striking and section 36BE of the Internal Revenue Code, and 2, in paragraph 2, 1 in subparagraph A by striking and at the end, 2, in subparagraph B by adding and at the end, and 3, by adding at the end the following new subparagraph. C, in the case such individual is an alien lawfully present in the United States, whether such individual is an eligible alien within the meaning of Section 36BE2 of such code. B, in subsection B3, by adding at the end the following new subparagraph. D, immigration status. In the case the individual's eligibility is based on an attestation of the enrollee's immigration status, an attestation that such individual is an eligible alien without the meaning of 36BE2 of the Internal Revenue Code of 1986, and C, in subsection C2B2, by adding at the end the following new subclause. 3, in the case of an individual described in clause 1.1 with respect to whom a premium tax credit under Section 36B of the Internal Revenue Code of 1986 is being claimed, the attestation that the individual is an eligible alien within the meaning of Section 36BE2 of such code. 2, advanced determinations. Section 1412D of the Patient Protection and Affordable Care Act, 42 U.S.C. 18082D is amended by inserting before the period at the end the following, comma, or credits under Section 36B of the Internal Revenue Code of 1986 for aliens who are not eligible aliens within the meaning of Section 36BE2 of such code. 3, effective date. The amendments made by this subsection shall apply with respect to plan years beginning on or after January 1, 2027. D, clerical amendments. 1, the heading for this section, 36BE, is amended by inserting and not eligible aliens after individuals not lawfully present. 2, the heading for this section, 36BE2, is amended by inserting eligible aliens after lawfully present. E, requirement to maintain minimum essential coverage. Section 5000A-D3 is amended by striking an alien lawfully present in the United States and inserting an eligible alien within the meaning of Section 36BE2. F, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. G, effective date. The amendments made by this section, other than the amendments made by subsection C, shall apply to taxable years beginning after December 31st, 2026. Section 71302, disallowing premium tax credit during periods of Medicaid ineligibility due to alien status. A, in general, Section 36B-C1 is amended by striking subparagraph B. B, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Subchapter B, preventing waste, fraud, and abuse. Section 71303, requiring verification of eligibility for premium tax credit. A, in general, Section 36B(C) is amended by adding at the end the following new paragraphs. 5, exchange enrollment verification requirement. A, in general, the term coverage month shall not include with respect to any individual covered by a qualified health plan enrolled through an exchange any month beginning before the exchange verifies using applicable enrollment information that shall be provided or verified by the applicant such individuals' eligibility, 1, to enroll in the plan through the exchange, and 2, for any advance payment under Section 1412 of the Patient Protection Affordable Care Act of the credit allowed under the section. B, applicable enrollment information. For purposes of subparagraph A, applicable enrollment information shall include affirmation of at least the following information to the extent relevant in determining eligibility described in subparagraph A. 1, household income and family size. 2, whether the individual is an eligible alien. 3, any health coverage status or eligibility for coverage. 4, place of residence. 5, such other information as may be determined by the Secretary in consultation with the Secretary of Health and Human Services as necessary to the verification prescribed under subparagraph A. C, verification of past months. In the case of a month that begins before verification prescribed by subparagraph A, such month shall be treated as a coverage month if and only if the exchange verifies for such month using applicable enrollment information that shall be provided or verified by the applicant, such individual's eligibility to have so enrolled and for such advance payment. D, exchange participation. Coordination with other procedures for determining eligibility. An individual shall not, solely by reason of failing to meet the requirements of this paragraph with respect to a month, be treated for such month as ineligible to enroll in a qualified health plan through an exchange. E, waiver for certain special enrollment periods. The Secretary may waive the application of subparagraph A in the case of an individual who enrolls in a qualified health care plan through an exchange for 1 or more months in the taxable year during a special enrollment period provided by the exchange on the basis of a change in the family size of the individual. F, information and reliance on third-party sources. An exchange shall be permitted to use any data available in the exchange and any reliable third-party sources in collecting information for verification by the applicant. 6, exchange compliance with filing requirements. The term coverage month shall not include with respect to any individual covered by a qualified health plan enrolled in through an exchange any month for which the exchange does not meet the requirements of Section 155.305F43 of Title 45 Code of Federal Regulations as published in the Federal Registrar on June 25, 2025, 90 FR 27074, applied as though it applied to all plan years after 2025 with respect to the individual. B, pre-enrollment verification, process required. Section 36B(C)(3)A is amended, 1, by striking health plan, the term, and inserting health plan 1, in general, the term, and 2, by adding at the end of the following the new clause. 2, pre-enrollment verification process required. Such term shall not include any plan enrolled in through an exchange unless such exchange provides a process for pre-enrollment verification through which any applicant may, beginning not later than August 1st, verify with the exchange the applicant's household income and eligibility for enrollment in such plan for plans years beginning in the subsequent year. C, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2027. Section 71304, disallowing premium tax credit in case of certain coverage enrolled in during special enrollment period. A, in general, Section 36B(C)(3)A, as amended by the preceding provisions of this Act, is amended by adding at the end the following new clause. 3, exception in case of certain special enrollment periods. Such term shall not include any plan enrolled in during a special enrollment period provided for by an exchange, 1, on the basis of the relationship of the individual's expected household income to such a percentage of the poverty line or such other amount as is prescribed by the Secretary of Human Services for purposes of such period, and 2, not in connection with the occurrence of an event or change in the circumstances specified by the Secretary of Health and Human Services for such purposes. B, regulations. The Secretary of the Treasury and the Secretary of Health and Human Services may each prescribe such rules and other guidance as may be necessary or appropriate to carry out the amendments made by this section. C, effective date. The amendments made by this section shall apply with respect to the plan years beginning after December 31st, 2025. Section 71305, eliminating limitation on recapture of advance payment of premium tax credit. A, in general, Section 36B F2 is amended by striking subparagraph B. B, conforming amendments. 1, Section 36B F2 is amended by striking advance payments and all that follows through if the advance payments and inserting the following: advance payments if the advance payments. 2, Section 35G 12B2 is amended by striking then Section 36B F2B shall be applied by substituting the amount determined under Clause 1 for the amount determined under Section 36B F2A, and inserting then the amount determined under Clause 1 shall be substituted for the amount determined under Section 36B F2. C, special rule for creation in certain individuals treated as applicable taxpayers. Paragraph 1 of Section 36BC is amended by adding at the end the new following subparagraph. E, special rule for certain individuals treated as applicable taxpayers. In the case of a taxable year beginning after December 31st, 2025, if an individual, one, is determined by an exchange at the time of enrollment in a qualified health plan through such exchange to have projected annual household income for the taxable year which equals or exceeds 100% of an amount equal to the poverty line for a family of the size involved, and 2, receives an advance payment of the credit under the section for 1 or more months during such taxable year under Section 1412 of the Patient Protection and Affordable Care Act, such individual shall not fail to be treated as an applicable taxpayer for such taxable year solely because the actual household income of the individual for the taxable year is less than 100% of an amount equal to the poverty line for a family of the size involved, unless the Secretary determines that the individual provided incorrect information to the exchange with intentional or reckless disregard for the facts. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025.
Subchapter C, Enhancing Choice for Patients. Section 71306, Permanent Extension of Safe Harbor for Absence of Deductible for Telehealth Services. A, in general, subparagraph E of Section 223C2 is amended to read as follows. E, safe harbor for absence of deductible for telehealth. A plan shall not fail to be treated as a high deductible health plan by reason of failing to have a deductible for telehealth and other remote care services. B, certain coverage disregarded. Clause 2 of Section 223C1B is amended by striking in the case of months or plan years to which paragraph 2E applies. C, effective date. The amendments made by this section shall apply to plan years beginning after December 31st, 2024. Section 71307, allowance of bronze and catastrophic plans in connection with health savings accounts. A, in general, Section 223C2 is amended by adding at the end of the following new subparagraph, H, bronze and catastrophic plans treated as high deductible health plans. The term high deductible health plan shall include any plan which is 1, available as individual coverage through an exchange established under Section 1311 or 1321 of the Patient Protection and Affordable Care Act, and 2, described in subsection D1A or E of Section 1302 of such act. B, effective date. The amendment made by this section shall apply to months beginning after December 31st, 2025. Section 71308, treatment of direct primary care service arrangements. A, in general, Section 223C1 is amended by adding at the end the following new subparagraph. E, treatment of direct primary care service arrangements. 1, in general, a direct primary care service arrangement shall not be treated as a health plan for purposes of subparagraph A2. 2, direct primary care service arrangement. For purposes of this subparagraph, 1, in general, the term direct primary care service arrangement means, with respect to any individual, an arrangement under which such individual is provided medical care, as defined in Section 213D, consisting solely of primary care services provided by primary care practitioners, as defined in Section 1833X2A of the Social Security Act, determined without regard to Clause 2 thereof, if the sole compensation for such care is a fixed periodic fee. 2, limitation. With respect to any individual for any month, such term shall not include any arrangement if the aggregate fees for all the direct primary care service arrangements determined without regard to this subclause with respect to such individual for such month exceed $150, twice such dollar amount in the case of an individual with any direct primary care service arrangement as so determined that covers more than one individual. 3, certain services specifically excluded from treatment as primary care services. For purposes of this subparagraph, the term primary care services shall not include 1, procedures that require the use of general anesthesia, 2, prescription drugs other than vaccines, and 3, laboratory services not typically administered in an ambulatory primary care setting. The Secretary, after consultation with the Secretary of Health and Human Services, shall issue regulations or other guidance regarding the application of this clause. B, direct primary care service arrangement fees treated as medical expenses. Section 223D2C is amended by striking or at the end of Clause 3, by striking the period at the end of Clause 4 and inserting or, and by adding at the end of the following new clause. 5, any direct primary care service arrangement. C, inflation adjustment. Section 223G1 is amended. 1, by striking in subsections B2 and C2A and inserting in subsections B2, C2A, and in the case of taxable years beginning after 2026, C1E22. 2, in subparagraph B, by striking clause 2 in clause 1 and inserting clauses 2 and 3, by striking and at the end of clause 1, by striking the period at the end of clause 2 and inserting and by inserting after clause 2 the following new clause. 3, in the case of the dollar amount in subsection C1E22, calendar year 2025, and 3, by inserting C1E22 after B2 in the last sentence. D, effective date. The amendments made by this section shall apply to months beginning after December 31st, 2025. Chapter 4, Protecting Rural Hospitals and Providers. Section 71401, Rural Health Transformation Program. A, in general, Section 2105 of the Social Security Act 42 U.S.C. 1397EE is amended by adding at the end the following new subsection. H, Rural Health Transformation Program. 1, appropriation. A, in general, there are appropriated out of any money in the Treasury not otherwise appropriated to the administrator of the Centers for Medicare and Medicaid Services, in this subsection referred to as the administrator, to provide allotments to states for purposes of carrying out the activities described in paragraph 6. 1, $10 billion for fiscal year 2028. 2, $10 billion for fiscal year 2029. 3, $2 billion for fiscal year 2030. 4, $2 billion for fiscal year 2031. And 5, $1 billion for fiscal year 2032. B, unexpended or unobligated funds. 1, in general, any amounts appropriated under subparagraph A that are unexpected or unobligated as of October 1st, 2034, shall be returned to the Treasury of the United States. 2, redistribution of unexpended or unobligated funds. In carrying out subparagraph A, the administrator shall, not later than March 31st, 2030, and annually thereafter through March 31st, 2034, 1, determine the amount of funds, if any, that are available under such subparagraph for a previous fiscal year are unexpended or unobligated with respect to such fiscal year and will not be available to a state in the current fiscal year pursuant to Clause 3. And 2, if the administrator determines that any such funds from a previous fiscal year remain, redistribute such funds in the current fiscal year to states that have an application approved under this subsection for such fiscal year in accordance with an allotment methodology specified by the administrator. 3, availability of funds. 1, in general, amounts allotted to a state under this subsection for a year shall be available for expenditure by the state through the end of the fiscal year following the fiscal year in which such amounts are allotted. 2, availability of amounts redistributed. Amounts redistributed to a state under Clause 2 with respect to a fiscal year shall be available for expenditure by the state through the end of the fiscal year following the fiscal year in which such amounts are redistributed, except in the case of amounts redistributed in fiscal year 2034, which shall only be available for expenditure through September 30th, 2034. 4, misuse of funds. If the administrator determines that a state is not using amounts allotted or redistributed to the state under this subsection in a manner consistent with the description provided by the state in its application approved under paragraph 2, the administrator may withhold payments to, or reduce payments to, or recover previous payments from the state under this subsection as the administrator deems appropriate, and any amounts so withheld or that remain after any such reduction or so recovered shall be returned to the Treasury of the United States. 2, application. A, in general, to be eligible for an allotment under this subsection, a state shall submit to the administrator during an application submission period to be specified by the administrator, but that ends not later than April 1st, 2027, an application in such form and manner as the administrator may specify. That includes 1, a detailed rural health transformation plan developed in consultation with the State Office of Rural Health. 1, to improve access to hospitals, other healthcare providers, and healthcare items and services furnished to rural residents of the state. 2, to improve healthcare outcomes of rural residents of the state. 3, to prioritize the use of new and emerging technologies that emphasize prevention and chronic disease management. 4, to initiate, foster, and strengthen local and regional strategic partnerships between rural hospitals and other healthcare providers in order to promote measurable quality improvement, increase financial stability, maximize economies of scale, and share best practices in care delivery. 5, to enhance economic opportunity for and the supply of healthcare clinicians through enhanced recruitment and training. 6, to prioritize data and technology-driven solutions that help rural hospitals and other rural healthcare providers furnish high-quality healthcare services as close to a patient's home as is possible. 7, that outlines strategies to manage long-term financial solvency and operating models of rural hospitals in the state. And 8, that identifies specific causes driving the accelerating rate of standalone rural hospitals becoming at risk of closure, conversion, or service reduction. 2, a certification that none of the amounts provided under this subsection shall be used by the state for an expenditure that is attributable to an intergovernmental transfer, certified public expenditure, or any other expenditure to finance the non-federal share of expenditures required under any provision of law, including under the state plan established under this title, the state plan established under Title XIX, or under a waiver of such plans, and 3, such other information as the administrator may require. B, deadline for approval. Not later than September 30th, 2027, the administrator shall approve or deny all applications submitted for an allotment under this subsection. C, one-time application. If an application of a state for an allotment under this subsection is approved by the administrator, the state shall be eligible for an allotment under this subsection for each of fiscal years 2028 through 2032, except as provided in paragraph 1B4. D, eligibility. Only the 50 states shall be eligible for an allotment under this subsection, and all references in this subsection to a state shall be treated as only referring to the 50 states. 3, allotments. A, in general, for each of the fiscal years 2028 through 2032, the administrator shall determine under subparagraph B the amount of the allotment for such fiscal year for each state with an approved application under this subsection. B, amount determined. From the amounts appropriated under paragraph 1A for each of fiscal years 2028 through 2032, the administrator shall allot 1, 50% of the amounts appropriated for each such fiscal year equally among all states with an approved application under this subsection, and 2, 50% of the amounts appropriated for each such fiscal year among all such states in an amount to be determined by the administrator in accordance with subparagraph C. C, considerations. In determining the amount to be allotted to a state under subparagraph B2 for a fiscal year, the administrator shall consider the following: the percentage of the state population that is located in a rural census tract of a metropolitan statistical area, as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 2, the proportion of rural health facilities as defined in subparagraph D in the state relative to the number of rural health facilities nationwide. 3, the situation of hospitals in the state as described in section 1902A13A4. 4, any other factors that the administrator determines appropriate. D, rural health facility defined. For the purposes of subparagraph C2, the term rural health facility means the following: 1, a subsection D hospital as defined in paragraph 1B of section 1886D, that 1 is located in a rural area as defined in paragraph 2D of such section. 2 is treated as being located in a rural area pursuant to paragraph 8E of such section. Or 3 is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992, 57 Federal Register 6725. 2, a critical access hospital as defined in section 1861MM1. 3, a sole community hospital as defined in section 1886D5D3. 4, a Medicare-dependent small rural hospital as defined in section 1886D5G4. 5, a low-volume hospital as defined in section 1886D12C. 6, a rural emergency hospital as defined in section 1861KKK2. 7, a rural health clinic as defined in section 1861AA2. 8, a federally qualified health center as defined in Section 1861 AA4. 9, a community mental health center as defined in Section 1861 FF3B. X, a health center that is receiving a grant under Section 330 of the Public Health Service Act. 11, an opioid treatment program as defined in Section 1861 JJJ2 that is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992. 57, Federal Register 6725. 12, a certified community behavioral health clinic as defined in Section 1905 JJ2 that is located in a rural census tract of a metropolitan statistical area as determined under the most recent modification of the Goldsmith modification, originally published in the Federal Register on February 27, 1992. 57, Federal Register 6725. 4, no matching payment. A state approved for an allotment under this subsection for a fiscal year shall not be required to provide any matching funds as a condition for receiving payments from the allotment. 5, terms and conditions. The administrator shall specify such terms and conditions for allotments to states provided under this subsection as the administrator deems appropriate, including the following. A, each state shall submit to the administrator at a time and in a form and manner specified by the administrator, 1, a plan for the state to use its allotment to carry out 3 or more of the activities described in paragraph 6, and 2, annual reports on the use of allotments, including such additional information as the administrator determines appropriate. B, not more than 10% of the amount allotted to a state for a fiscal year may be used by the state for the administrative expenses. C, in the event that a state uses amounts from an allotment to provide payments to healthcare providers in accordance with subparagraph B or J of paragraph 6, the state shall ensure that such amounts are not used to reimburse any expense or loss that 1, has been reimbursed from any other source, or 2, any other source is obligated to reimburse. 6, use of funds. Amounts allotted to a state under this subsection shall be used for 3 or more of the following health-related activities. A, promoting evidence-based, measurable interventions to improve prevention and chronic disease management. B, providing payments to healthcare providers as defined by the administrator for the provision of healthcare items or services as specified by the administrator. C, promoting consumer-facing, technology-driven solutions for the prevention and management of chronic diseases. D, providing training and technical assistance for the development and adoption of technology-enabled solutions that improve care delivery in rural hospitals, including remote monitoring, robotics, artificial intelligence, and other advanced technologies. E, recruiting and retaining clinical workforce talent to rural areas with commitments to serve rural communities for a minimum of 5 years. F, providing technical assistance, software, and hardware for significant information technology advances designed to improve efficiency, enhance cybersecurity capability development, and improve patient health outcomes. Assisting rural communities to right-size their healthcare delivery systems by identifying needed preventative, ambulatory, pre-hospital, emergency, acute inpatient care, outpatient care, and post-acute care service lines.
Pursuant to the order of February 29th, 1960, the hour of 12 noon having arrived, the Senate having been in continuous session since yesterday, the Senate will suspend for a prayer by the Senate chaplain.
Let us pray. Lord of creation, you establish day and night and the orderly movements of the seasons. That same providence orders the lives of our senators, our nation, and our world. As our lawmakers seek to do what is right, give them the wisdom to discern what is best. Show them the pitfalls to avoid and the opportunities to seize. Lord, keep them from becoming weary in their pursuit of your purposes as they remember your promise to bring a bountiful harvest. May they cling to the enduring principles of your truth that will lead them to your desired destination. We pray in your wonderful name. Amen.
The clerk will continue reading.
H, supporting access to opioid use disorder treatment services as defined in Section 1861JJJ1, other substance use disorder treatment services and mental health services. I, developing projects that support innovative models of care that include value-based care arrangements and alternative payment models as appropriate. J, additional uses designed to promote sustainable access to high-quality rural health care services as determined by the administrator. 7, exemptions. Paragraphs 2, 3, 5, 6, 8, 10, 11, and 12 of subsection C do not apply to payments under this subsection. 8, review. There shall be no administrative or judicial review under Section 1116 or otherwise of amounts allotted or redistributed to states under this subsection, payments to states withheld or reduced under this subsection, or previous payments recovered from states under this subsection. B, conforming amendments. Title XXI of the Social Security Act, 42 U.S.C. 1397AA is amended. 1, in Section 2101, A, in subsection A, in the matter of preceding paragraph 1, by striking the purpose and inserting, except with respect to the Rural Health Transformation Program established in Section 2105H, the purpose. And B, in subsection B, in the matter preceding paragraph 1, by inserting subsection A or G of before Section 2105. 2, in Section 2105C1, by striking and may not include and inserting or to carry out the Rural Health Transformation Program established in subsection H, and, except in the case of amounts made available under subsection H, may not include and. 3, in subsection 2106A1, by inserting subsection A or G of before Section 2105. C, implementation. The administrator of the Centers for Medicare and Medicaid Services shall implement this section, including the amendments made by this section, by program instruction or other forms of program guidance. Subtitle C, increase in debt limit. Section 72001, modification of limitation on the public debt. The limitation under Section 3101B of Title 31 United States Code, as most recently increased by Section 401B of Public Law 1185, 31 U.S.C. 3101 note, is increased by $5 trillion. Title VIII, Committee on Health, Education, Labor, and Pensions. Subtitle A, exemption of certain assets. Section 80001, exemption of certain assets. A, exemption of certain assets. Section 480F2 of the Higher Education Act of 1965, 20 U.S.C. 1087 VV F2 is amended. 1, by striking net value of the and inserting the following, net value of A, the. 2, by striking the period at the end and inserting a semicolon. And 3, by adding at the end the following. B, a family farm on which the family resides. C, a small business with not more than 100 full-time or full-time equivalent employees, or any part of such a small business that is owned and controlled by the family. Or D, a commercial fishing business and related expenses, including fishing vessels and permits owned and controlled by the family. B, effective date and application. The amendments made by subsection A shall take effect on July 1st, 2026, and shall apply with respect to award year 2026 through 2027, and each subsequent award year as determined under the Higher Education Act of 1965, 20 U.S.C. 1001, Subtitle B, loan limits. Section 81001, establishment of loan limits for graduate and professional students and parent borrowers, termination of graduate and professional plus loans. Section 455A of the Higher Education Act of 1965, 20 U.S.C. 1087EA is amended. 1, in paragraph 3A, in the paragraph heading by inserting and federal direct plus loans after loans, by striking subparagraph A and inserting the following. A, termination of authority to make interest-subsidized loans to graduate and professional students, subject to subparagraph B and notwithstanding any provision of this part or Part B. 1, for any period of instruction beginning on or after July 1st, 2012, a graduate or professional student shall not be eligible to receive a federal direct Stafford loan under this part. And 2, for any period of instruction beginning on July 1st, 2012 and ending on June 30th, 2026, the maximum annual amount of federal direct unsubsidized Stafford loans such a student may borrow in any academic year, as defined in Section 481A2, or its equivalent shall be the maximum annual amount for such student determined under Section 428H, plus an amount equal to the amount of federal direct Stafford loans the student would have received in the absence of this subparagraph. And C, by adding at the end the following. C, termination of authority to make federal direct plus loans to graduate and professional students, subject to paragraph 8 and notwithstanding any provision of this part or Part B, for any period of instruction beginning on or after July 1st, 2026, a graduate graduate or professional student shall not be eligible to receive a federal direct plus loan under this part. And 2, by adding at the end the following: for graduate and professional annual and aggregate limits for federal direct unsubsidized Stafford loans beginning July 1st, 2026. A, annual limits beginning July 1st, 2026. Subject to paragraphs 7A and 8, beginning on July 1st, 2026, the maximum annual amount of federal direct unsubsidized Stafford loans. 1, a graduate student who is not a professional student may borrow in any academic year or its equivalent shall be $20,500. And 2, a professional student may borrow in any academic year or its equivalent shall be $50,000. B, aggregate limits. Subject to paragraph 6, 7A, and 8, beginning on July 1st, 2026, the maximum aggregate amount of federal direct unsubsidized Stafford loans, in addition to the amount borrowed for undergraduate education that 1, is a graduate student, 1, who is not and has not been a professional student, may borrow for programs of study described in subparagraph C1, shall be $100,000, or 2, who is or has been a professional student, may borrow for programs of study described in subparagraph C1, shall be an amount equal to AA, $200,000 minus BB, the amount such student borrowed for programs of study described in subparagraph C2, and 2, a professional student, 1, who is not and has not been a graduate student, may borrow for programs of study described in subparagraph C2, shall be $200,000, or 2, who is or has been a graduate student, may borrow for programs of study described in subparagraph C2, shall be an amount equal to AA, $200,000 minus BB, the amount such student borrowed for programs of study described in subparagraph C1. C, definitions. 1, graduate student. The term graduate student means a student enrolled in a program of study that awards a graduate credential, other than a professional degree, upon completion of the program. 2, professional student. In this paragraph, the term professional student means a student enrolled in a program of study that awards a professional degree, as defined under Section 668.2 of Title 34, Code of Federal Regulations, as in effect on the date of enactment of this paragraph, upon completion of the program. 5, parent borrower annual and aggregate limits for federal direct plus loans beginning July 1st, 2026. A, annual limits. Subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, for each dependent student, the total maximum annual amount of federal direct plus loans that may be borrowed on behalf of that dependent student by all parents of that dependent student shall be $20,000. B, aggregate limits. Subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, for each dependent student, the total maximum aggregate amount of federal direct plus loans that may be borrowed on behalf of that dependent student by all parents of that dependent student shall be $65,000, without regard to any amounts repaid, forgiven, canceled, or otherwise discharged on any such loan. 6, lifetime maximum aggregate amount for all students. Subject to paragraph 8 and notwithstanding any provision of this part or part B, beginning on July 1st, 2026, the maximum aggregate amount of loans made, insured, or guaranteed under this title that a student may borrow other than a federal direct plus loan or a loan under Section 428B made to the student as a parent borrower on behalf of a dependent student shall be $257,500 without regard to any amounts repaid, forgiven, canceled, or otherwise discharged on any such loan. 7, additional rules regarding annual loan limits. A, less than full-time enrollment, notwithstanding any provision of this part or part B, in any case in which a student is enrolled in a program of study of an institution of higher education on less than a full-time basis during any academic year, the amount of a loan that student may borrow for an academic year or its equivalent shall be reduced in direct proportion to the degree to which that student is not so enrolled on a full-time basis, rounded to the nearest whole percentage point, as provided in a schedule of reductions published by the Secretary computed for purposes of this subparagraph. B, institutionally determined limits, notwithstanding the annual loan limits established under this section, and for undergraduate students under this part and part B, beginning on July 1st, 2026, an institution of higher education, at the discretion of a financial aid administrator at the institution, may limit the total amount of loans made under this part for a program of study for an academic year that a student may borrow and that a parent may borrow on behalf of such student, as long as any such limit is applied consistently to all students enrolled in such program of study. 8, interim exception for certain students. A, application of prior limits. Paragraphs 3C, 4, 5, and 6 shall not apply, and paragraph 3A2 shall apply as such paragraph was in effect for periods of instruction ending before June 30th, 2026, during the expected time time to credential described in subparagraph B with respect to an individual who, as of June 30th, 2026, 1, is enrolled in a program of study at an institution of higher education, and 2, has received a loan or on whose behalf a loan was made under this part for such program of study. B, expected time to credential. For purposes of this paragraph, the expected time to credential of an individual shall be equal to the lesser of 1, 3 academic years, or 2, the period determined by calculating the difference between 1, the program length for the program of study in which the individual is enrolled, and 2, the period of such program of study that such individual has completed as of the date of the determination under this subparagraph. C, definition of program length. In this paragraph, the term program length means the minimum amount of time in weeks, months, or years that is specified in the catalog, marketing materials, or other official publications of an institution of higher education for a full-time student to complete the requirements for a specific program of study. Subtitle C, loan repayment. Section 82001, loan repayment. A, transition to income-based repayment plans. 1, selection. The Secretary of Education shall take such steps as may be necessary to ensure that before July 1st, 2028, each borrower who has one or more loans that are in a repayment status in accordance with or an administrative forbearance as associated with an income contingent repayment plan authorized under Section 455E of the Higher Education Act of 1965, referred to in this subsection as covered income contingent loans, selects one of the following income-based repayment plans that is otherwise applicable, and for which that borrower is otherwise eligible, for the repayment of the covered income contingent loans of the borrower. A, the Repayment Assistant Plan under Section 455Q of the Higher Education Act of 1965. B, the Income-Based Repayment Plan under Section 493C of the Higher Education Act of 1965. C, any other repayment plan as authorized under Section 455D1 of the Higher Education Act of 1965. 2, commencement of new repayment plan. Beginning on July 1st, 2028, a borrower described in paragraph 1 shall begin repaying the covered income contingent loans of the borrower in accordance with the repayment plan selected under paragraph 1, unless the borrower chooses to begin repaying in accordance with the repayment plan selected under paragraph 1 before such date. 3, failure to select. In the case of a borrower described in paragraph 1 who fails to select a repayment plan in accordance with such paragraph, the Secretary of Education shall, A, enroll the covered income contingent loans of such borrower in 1, the Repayment Assistant Plan under Section 455Q of the Higher Education Act of 1965 with respect to loans that are eligible for the Repayment Assistant Plan under such subsection, or 2, the Income-Based Repayment Plan under Section 493C of such act with respect to loans that are not eligible for the Repayment Assistance Plan, and B, require the borrower to begin repaying income contingent loans according to the plans under subparagraph A on July 1st, 2028. B, repayment plans. Section 455D of the Higher Education Act of 1965, 20 U.S.C. 1087 ED is amended. 1, in paragraph 1, A, in the matter preceding subparagraph A by inserting before July 1st, 2026, who has not received a loan made under this part or on or after July 1st, 2026, after made under this part. B, in subparagraph D, 1, by inserting before June 30th, 2028, before an income contingent repayment plan, and 2, by striking and after the semicolon. C, in subparagraph E, 1, by striking that enables borrowers who have a partial financial hardship to make a lower monthly payment.
Thank you. 2, by striking a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on such federal direct plus loan or a loan under Section 428B made on behalf of a dependent student and inserting an accepted consolidation loan as defined in Section 493C A2 and 3 by striking the period at the end and inserting and D, by adding at the end of the following F, beginning on July 1, 2026, the income-based repayment assistance plan under subsection Q, provided that 1, such plan shall not be available for the repayment of accepted loans as defined in paragraph 7E, and 2, the borrower is required to pay each outstanding loan of the borrower made under this part under such repayment assistance plan, except that a borrower of an accepted loan, as defined in paragraph 7E, may repay the accepted loan separately from other loans under this part obtained by the borrower. 2, in paragraph 5, by amending subparagraph B to read as follows. B, repay the loan pursuant to an income-based repayment plan under subsection Q or section 493C as applicable. And 3, by adding at the end of the following 6, termination and limitation of repayment authority. A, sunset of repayment plans available before July 1, 2026. Paragraphs 1 through 4 of this subsection shall only apply to loans made under this part before July 1, 2026. B, prohibitions. The Secretary may not, for any loan made under this part on or after July 1, 2026, 1, authorize a borrower of such a loan to repay such loan pursuant to a repayment plan that is not described in paragraph 7A, or 2, carry out or modify a repayment plan that is not described in such paragraph. 7, repayment plans for loans made on or after July 1, 2026. A, design and selection. Beginning on July 1st, 2026, the Secretary shall offer a borrower of a loan made under this part on or after such date, including such a borrower who also has a loan made under this part before such date, 2 plans for repayment of the borrower's loans. Under this part, including principal and interest on such loans. The borrower shall be entitled to accelerate without penalty repayment on such loans. The borrower may choose 1, a standard repayment plan, 1, with a fixed monthly repayment amount paid over a fixed period of time equal to the applicable period determined under subclause 2, and 2, with the applicable period of time for repayment determined based on the total outstanding principal of all loans of the borrower made under this part before, on or after July 1, 2026, at the time the borrower is entering repayment under such plan as follows. AA, for a borrower with total outstanding principal of less than $25,000, a period of 10 years. BB, for a borrower with total outstanding principal of not less than $25,000 and less than $50,000, a period of 15 years. CC, for a borrower with total outstanding principal of not less than $50,000 and less than $100,000, a period of 20 years, and DD, for a borrower with total outstanding principal of $100,000 or more, a period of 25 years, or 2, the income-based repayment assistance plan under subsection Q. B, selection by Secretary. If a borrower of a loan made under this part on or after July 1, 2026 does not select a repayment plan described in subparagraph A, the Secretary shall provide the borrower with the standard repayment plan described in subparagraph A1. C, selection applies to all outstanding loans. A borrower is required to pay each outstanding loan of the borrower made under this part under the same selected repayment plan, except that a borrower who selects the repayment assistance plan and also has an accepted loan that is not eligible for repayment under such repayment assistance plan shall repay the accepted loan separately from other loans under this part obtained by the borrower. D, changes of repayment plan. A borrower may change the borrower's selection of 1, the standard repayment plan under subparagraph 4.1, or the Secretary's selection of such plan for the borrower under subparagraph B, as the case may be, to the repayment assistance plan under subparagraph A2 at any time. 2, the repayment assistance plan under subparagraph A2 to the standard repayment plan under subparagraph A1 at any time. Repayment for E, repayment for borrowers with accepted loans made on or after July 1, 2026. 1, standard repayment plan required, notwithstanding paragraphs A through D, beginning on July 1, 2026, the Secretary shall require a borrower who has received an accepted loan made on or after such date, including such a borrower who also has an accepted loan made before such date, to repay each accepted loan, including principal and interest on those accepted loans under the standard repayment plan under subparagraph A1. The borrower shall be entitled to accelerate without penalty repayment on such loans. 2, accepted loan defined. For the purposes of this paragraph, the term accepted loan means a loan with an outstanding balance that is 1, a federal direct plus loan that is made on behalf of a dependent student, or 2, a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on AA. An accepted plus loan as defined in section 493CA1, or BB, an accepted consolidation loan as such term is defined in section 493CA2A, notwithstanding subparagraph B of each section. C, elimination of authority to provide income contingent repayment plans. 1, repeal section E of section 455 of the Higher Education Act of 1965, 20 U.S.C. 1087 EE is repealed. 2, further amendments to eliminate income contingent repayment. A, section 428 of the Higher Education Act of 1965, 20 U.S.C. 1078 is amended. 1, in subsection B, 1D, by striking B subject to income contingent repayment in accordance with subsection M, and inserting B subject to income-based repayment in accordance with subsection M, and 2, in subsection M. 1, in the subsection heading by striking income contingent, and 2, by amending paragraph 1 to read as follows. 1, authority of secretary to require the secretary may require borrowers who have defaulted on loans made under this part that are assigned to the secretary under subsection C8 to repay those loans pursuant to an income-based repayment plan under section 493C, and 3, in the heading of paragraph 2, by striking income contingent, or B, section 28C of the Higher Education Act of 1965, 20 U.S.C. 1078-3 is amended. 1, in subsection A3B1 5AA, by striking for the purposes of obtaining income contingent repayment or income-based repayment, and inserting for the purposes of qualifying for an income-based repayment plan under section 455Q or section 493C as applicable. 2, in subsection B5, by striking be repaid either pursuant to income contingent repayment under Part D of this title, pursuant to income-based repayment under Section 493C, or pursuant to any other repayment provision under this section, and inserting be repaid pursuant to an income-based repayment plan under Section 493C or any other repayment provision under this section. And 3, in subsection C, 1, in paragraph 2A, by striking or by the terms of repayment pursuant to income contingent repayment offered by the Secretary under subsection B5, and inserting or by the terms of repayment pursuant to an income-based repayment plan under section 493C, and 2, in paragraph 3B, by striking except as required by the terms of repayment pursuant to income contingent repayment offered by the Secretary under subsection B5, and inserting except as required by the terms of repayment pursuant to an income-based repayment plan under section 493C. C, section 485D1 of the Higher Education Act of 1965, 20 U.S.C. 1092D1 is amended by striking income contingent, and D, section 484A2 of the Higher Education Act of 1965, 20 U.S.C. 1098HA2 is amended. 1, in the paragraph heading by striking income contingent and income-based and inserting income-based, and 2, in subparagraph A, 1, in the matter preceding clause 1, by striking income contingent or, and 2, in clause 2.1, by striking section 455E8 or the equivalent procedures established under section 493C 2B as applicable, and inserting section 493C2. 3, effective date. The amendments may be made by this section shall take effect on July 1, 2028. D, repayment assistance plan, section 455 of the Higher Education Act of 1965, 20 U.S.C. 1087E is amended by adding at the end of the following new subsection Q repayment assistance plan. 1, in general, notwithstanding any other provision of this act beginning on July 1, 2026, the Secretary shall carry out an income-based repayment plan to be known as the repayment assistance plan that shall have the following terms and conditions. A, the total monthly repayment plan amount owed by a borrower for all of the loans of the borrower that are repaid pursuant to the repayment assistance plan shall be equal to the applicable monthly payment of a borrower calculated under paragraph 4B, except that the borrower may not be precluded from repaying an amount that exceeds such amount for any month. B, the Secretary shall apply the borrower's applicable monthly payment under this paragraph first toward interest due on each such loan, next toward any fees due on each loan, and then toward the principal of each loan. C, any principal due and not paid under subparagraph B or paragraph 2B shall be deferred. D, a borrower who is not in a period of deferment or forbearance shall make an applicable monthly payment for each month until the earlier of 1, the date on which the outstanding balance of principal and interest due on all of the loans of the borrower that are repaid pursuant to the repayment assistance plan is $0, or 2, the date on which the borrower has made 360 qualifying monthly payments. E, the Secretary shall cancel any outstanding balance of principal and interest due on a loan made under this part to a borrower. 1, who for any period of time participated in the repayment assistance plan under this subsection. 2, whose most recent payment for such loan prior to the loan cancellation under this subparagraph was made under such repayment assistance plan. And 3, who has made 360 qualifying monthly payments on such loan. F, for the purposes of this subsection, the term qualifying monthly payment means any of the following. 1, an on-time applicable monthly payment under this subsection. 2, an on-time monthly payment under the standard repayment plan under subsection D7A1 of not less than the monthly payment required under such plan. 3, a monthly payment under any repayment plan, excluding the repayment assistance plan under the subsection of not less than the monthly payment that would be required under a standard repayment plan under section 455D1A with a repayment period of 10 years. 4, a monthly payment under section 493C of not less than the monthly payment required under such section, including a monthly payment equal to the minimum payment amount permitted under such section. 5, a monthly payment made before July 1, 2028 under an income contingent repayment plan carried out under section 455D1D or under an alternative repayment plan in lieu of repayment under such an income contingent repayment plan, if placed in such an alternative repayment plan by the Secretary, of not less than the monthly payment required under such a plan, including a monthly payment equal to the minimum payment amount permitted under such a plan. 6, a month when the borrower did not make a payment because the borrower was in deferment under subsection F2B or due to an economic hardship described in subsection F2D. 7, a month that ended before the date of enactment of the subsection when the borrower did not make a payment because the borrower was in a period of deferment or forbearance described in section 685-209K44 of Title 34 Code of Federal Regulations as in effect on the date of enactment of this subsection. G, the procedures established by the Secretary under section 493CC shall apply for annually determining the borrower's eligibility for the repayment assistance plan, including verification of a borrower's annual income and the annual amount due on the total amount of loans eligible to be repaid under this subsection, and such other procedures as are necessary to effectively implement income-based repayment under this subsection. With respect to carrying out section 494A2, for the repayment assistance plan, an individual may elect to opt out of the disclosures required under section 491A2A 2, in accordance with the procedures established under Section 493C, C2. 2, balance assistance for distressed borrowers. A, interest subsidy with respect to a borrower of a loan made under this part for each month for which such a borrower makes an on-time applicable monthly payment required under paragraph 1A, and such monthly payment is insufficient to pay the total amount of interest that accrues for the month on all loans of the borrower repaid pursuant to the repayment assistance plan. Under this subsection, the amount of interest accrued and not paid for the month shall not be charged to the borrower. B, matching principal payment. With respect to a borrower of a loan made under this part and not in a period of deferment or forbearance, for each month for which a borrower makes an on-time applicable monthly payment required under paragraph 1A, and such monthly payment reduces the total outstanding principal balance of all loans of the borrower repaid pursuant to the repayment assistance plan under this subsection by less than $50, the Secretary shall reduce such outstanding principal balance of the borrower by an amount that is equal to one, the amount that is the lesser of one, $50, or two, the total amount paid by the borrower for such month pursuant to paragraph 1A, minus two, the total amount paid by the borrower for such month pursuant to paragraph 1A that is applied to such total outstanding principal balance. 3, additional documents. A borrower who chooses or is required to repay a loan under the subsection and for whom adjusted gross income is unavailable or does not reasonably reflect the borrower's current income shall provide to the Secretary other documentation of income satisfactory to the Secretary, which documentation the Secretary may use to determine repayment under this subsection. 4, definitions. In this subsection, A, adjusted gross income. The term adjusted gross income, when used with respect to a borrower, means the adjusted gross income as such term is defined in Section 62 of the Internal Revenue Code of 1986 of the borrower and the borrower's spouse as applicable for the most recent taxable year, except that in the case of a married borrower who files a separate federal income tax return, the term does not include the adjusted gross income of the borrower's spouse. B, applicable monthly payment. 1, in general, except as provided in clause 2, 3, or 6, the term applicable monthly payment means, when used with respect to a borrower, the amount equal to 1, the applicable base payment of the borrower divided by 12 minus 2, $50 for each dependent of the borrower, which in the case of a married borrower filing a separate federal income tax return shall include only each dependent that the borrower claims on that return. 2, minimum amount. In the case of a borrower with an applicable monthly payment amount calculated under Clause 1 that is less than $10, the applicable monthly payment of the borrower shall be $10. 3, final payment. In the case of a borrower whose total outstanding balance of principal and interest on all of the loans of the borrower that are repaid pursuant to the repayment assistance plan is less than the applicable monthly payment calculated pursuant to Clause 1 or 2 as applicable, then the applicable monthly payment of the borrower shall be the total outstanding balance of principal and interest on all such loans. 4, base payment. The amount of the applicable base payment for a borrower with an adjusted gross income of 1, not more than $10,000 is $120. 2, more than $10,000 and not more than $20,000 is 1% of such adjusted gross income. 3, more than $20,000 and not more than $30,000 is 2% of such adjusted gross income. 4, more than $30,000 and not more than $40,000 is 3% of such adjusted gross income. 5, more than $40,000 and not more than $50,000 is 4% of such adjusted gross income. 6, more than the $50,000 and not more than $60,000 is 5% of such adjusted gross income. 7, more than $60 and not more than $70 is 6% of such adjusted gross income. 8, more than $70,000 and not more than $80,000 is 7% of such a gross adjusted income. 9, more than $80,000 and not more than $90,000 is 8% of such adjusted gross income. 10, more than $90,000 and not more than $100,000 is 9% of such adjusted gross income, and 11, more than $100,000 is 10% of such adjusted gross income. 5, dependent. For the purposes of this paragraph, the term dependent means an individual who is a dependent under Section 152 of the Internal Revenue Code of 1986. 6, special rule. In the case of a borrower who is required by the Secretary to provide information to the Secretary to determine the applicable monthly payment of the borrower under this subparagraph, and who does not comply with such requirement, the applicable monthly payment of the borrower shall be 1, the sum of the monthly payment amounts the borrower would have paid for each of the borrower's loans made under this part under a standard repayment plan with a fixed monthly repayment amount paid over a period of 10 years based on the outstanding principal due on such loan when such loan entered repayment, and 2, determined pursuant to this clause until the date on which the borrower provides such information to the Secretary. E, federal consolidation loans. Section 455G of the Higher Education Act of 1965, 20 U.S.C. 1087 EG is amended by adding at the end of the following new paragraph 3, consolidation loans made on or after July 1, 2026, a federal direct consolidation loan offered to a borrower under this part on or after July 1, 2026 may only be repaid pursuant to a repayment plan described in Clause 1 or 2 of subsection D7A of this section as applicable, and the repayment schedule of such a consolidation loan shall be determined in accordance with such repayment plan. F, income-based repayment. 1, amendments. A, accepted consolidation loan defined. Section 493C(a)(2) of the Higher Education Act of 1965, 20 U.S.C. 1098 E(a)(2) is amended to read as follows. 2, accepted consolidation loan. A, in general, the term accepted consolidation loan means 1, a consolidation loan under Section 428C or a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on an accepted plus loan, or 2, a consolidation loan under Section 428C or a federal direct consolidation loan if the proceeds of such loan were used to discharge the liability on a consolidation loan under Section 428C or a federal direct consolidation loan described in Clause 1. B, exclusion. The term accepted consolidation loan does not include a federal direct consolidation loan described in paragraph A, in subparagraph A, that on any date during the period beginning on the date of enactment of the subparagraph and ending on June 30th, 2028 was being repaid. 1, pursuant to the income contingent repayment ICR plan in accordance with Section 685-209B of Title 34 Code of Federal Regulations as in effect on June 30, 2023, or 2, pursuant to another income-driven repayment plan. B, termination of partial financial hardship eligibility, Section 493C(a)(3) of the Higher Education Act of 1965, 20 U.S.C. 1098 E(a)(3) is amended to read as follows. 3, applicable amount. The term applicable amount means 15% of the result obtained by calculating on at least an annual basis the amount by which A, the borrower's and the borrower's spouse, if applicable, adjusted gross income exceeds B, 150% of the poverty line, applicable to the borrower's family size as determined under Section 673(2) of the Community Services Block Grant Act 42 U.S.C. 99022. C, terms of income-based repayment, Section 493CB of the Higher Education Act of 1965, 20 U.S.C. 1098 EB is amended. 1, by amending paragraph 1 to read as follows. 1, a borrower of any loan made, insured, or guaranteed under Part B or D other than accepted plus loan or accepted consolidation loan may elect to have the borrower's aggregate monthly payment for all such loans not exceed the applicable amount divided by 12. 2, by striking paragraph 6 and inserting the following. 6, if the monthly payment amount calculated under this section for all loans made to the borrower under Part B or D other than an accepted plus loan or accepted consolidation loan exceeds the monthly amount calculated under Section 428B9A1 or 455D1A based on a 10-year repayment period when the borrower first made the election described in this subsection, referred to in this paragraph as the standard monthly repayment amount, or if the borrower no longer wishes to continue the election under this subsection, then A, the maximum monthly payment required to be paid for all loans made to the borrower under Part B or D other than an accepted plus loan or accepted consolidation loan shall be the standard monthly repayment amount, and B, the amount of time the borrower is permitted to repay such loans may exceed 10 years. 3, in paragraph 7B4, by inserting as such section was in effect on the day before the date of the repeal of Section 455E, after Section 455D1D and 4 in paragraph 8, by inserting or the repayment assistance program under Section 455Q after standard repayment plan. D, eligibility determination, Section 493CC of the Higher Education Act of 1965, 20 U.S.C. 1098 EC is amended to read as follows. C, eligibility determinations, automatic certification. 1, in general, the Secretary shall establish procedures for annually determining, in accordance with paragraph 2, the borrower's eligibility for income-based repayment, including the verification of a borrower's annual income and the annual amount due on the total amount of loans made, insured, or guaranteed under Part B or D, other than an accepted plus loan or accepted consolidation loan, and such other procedures as are necessary to effectively implement income-based repayment under this section. The Secretary shall consider, but is not limited to, the procedures established in accordance with Section 455E1 as in effect on the day before the date of repeal of subsection E of Section 455 or in connection with income-sensitive repayment schedules under Section 428B9A3 or 428CB1E. 2, automatic recertification. A, in general, the Secretary shall establish and implement with respect to any borrower enrolled in an income-based repayment program under this section or under Section 455Q procedures to 1, use return information disclosed under Section 6103.113 of the Internal Revenue Code of 1986 pursuant to approval provided under Section 494 to determine for repayment obligation of the borrower without further action by the borrower. 2, allow the borrower or the spouse of the borrower at any time to opt out of disclosure under such Section 6103.113 and instead provide such information as the Secretary may require to determine the repayment obligation of the borrower or withdraw from the repayment plan under this section or under Section 455Q as the case may be. And, okay, right there.
3, provide the borrower with an opportunity to update the return information so disclosed before the determination of the repayment obligation of the borrower. B, applicability. Subparagraph A shall apply to each borrower of a loan eligible to be repaid under this section or under Section 455Q who, on or after the date on which the Secretary establishes procedures under such subparagraph A, 1, selects or is required to repay such loan pursuant to an income-based repayment plan under this section or under Section 455Q, or 2, recertifies income or family size under such plan. E, special terms for new borrowers on and after July 1, 2014. Section 493CE of the Higher Education Act of 1965, 20 U.S.C. 1098EE is amended 1 in the subsection heading by inserting "and before July 1, 2026" after July 1, 2014, and 2 by inserting "and before July 1, 2026" after July 1, 2014. 2, effective date and application. The amendments made by this subsection shall take effect on the date of enactment of this title and shall apply with respect to any borrower who is in repayment before, on, or after the date of enactment of this title. G, FFEL adjustment, Section 428B9AV of the Higher Education Act of 1965, 20 U.S.C. 1078B9AV is amended by striking "who has a partial financial hardship." Section 82002, deferment forbearance. A, sunset of economic hardship and unemployment deferments, Section 455F of the Higher Education Act of 1965, 20 U.S.C. 1087EF is amended 1 by striking the subsection heading and inserting the following: deferment forbearance. 2, in paragraph 2, A and subparagraph B, by striking "not in" and inserting subject to paragraph 7, "not in," and B in subparagraph D by striking "not in" and inserting subject to paragraph 7, "not in," and 3 by adding at the end the following. 7, sunset of unemployment and economic hardship deferments. A borrower who receives a loan made under this part on or after July 1, 2027 shall not be eligible to defer such loan under subparagraph B or D of paragraph 2. B, forbearance on loans made under this part on or after July 1, 2027, Section 455F of the Higher Education Act of 1965, 20 U.S.C. 1087EF is amended by adding at the end the following. 8, forbearance of loans made under this part on or after July 1, 2027. A borrower who receives a loan made under this part on or after July 1, 2027 may only be eligible for a forbearance on such loan pursuant to Section 428C3B that does not exceed 9 months during any 24-month period. Section 82003, loan rehabilitation. A, updating loan rehabilitation limits. 1, FFEL and direct loans, Section 428FA5 of the Higher Education Act of 1965, 20 U.S.C. 1078-6A5 is amended by striking 1 time and inserting 2 times. 2, Perkins loans, Section 464H1D of the Higher Education Act of 1965, 20 U.S.C. 1087DDH1D is amended by striking once and inserting twice. 3, effective date. The amendments made by this subsection shall take effect beginning on July 1, 2027, and shall apply with respect to any loan made, insured, or guaranteed under Title IV of the Higher Education Act of 1965, 20 U.S.C. 1070, B, minimum monthly payment amount. Section 428FA1B of the Higher Education Act of 1965, 20 U.S.C. 1078-6A1B is amended by adding at the end the following. With respect to a borrower who has 1 or more loans made under Part D on or after July 1, 2027 that are described in subparagraph A, the total monthly payment of the borrower for all such loans shall not be less than $10. Section A2004, public service loan forgiveness. Section 455M1A of the Higher Education Act of 1965, 20 U.S.C. 1087EM1A is amended 1 in Clause 3 by striking "or" and inserting a semicolon. 2 in Clause 4 by striking and inserting "as in effect on the day before the date of the repeal of subsection E of this section," or, and 3 by adding at the end of the following new clause. 5, one-time payments under the repayment assistance plan under subsection Q, and Section 82005, student loan servicing. Paragraph 1 of Section 458A of the Higher Education Act of 1965, 20 U.S.C. 1087HA1 is amended to read as follows. 1, additional mandatory funds for servicing. There shall be available to the Secretary, in addition to any other amounts appropriated under the Appropriations Act for administrative costs under this part and Part B, and out of any money in the Treasury not otherwise appropriated, $1 billion to be obligated for administrative costs under this part and Part B, including the cost of servicing the direct loan student loan programs under this part, which shall remain available until expended. Subtitle D, Pell Grants. Section 83001, eligibility. Foreign income and federal Pell Grant eligibility. 1, adjusted gross income defined. Section 401A2A of the Higher Education Act of 1965, 20 U.S.C. 1070A(a)(2)A is amended to read as follows. A, the term adjusted gross income means, 1, in the case of a dependent student for the second tax year preceding the academic year, 1, the adjusted gross income as defined in Section 62 of the Internal Revenue Code of 1986 of the student's parents, plus 2, for federal Pell Grant determinations made for academic years beginning on or after July 1, 2026, the foreign income as described in Section 480B5 of the student's parents, and 2, in the case of an independent student for the second tax year preceding the academic year, 1, the adjusted gross income as defined in Section 62 of the Internal Revenue Code of 1986 of the student and the student's spouse, if applicable, plus 2, for federal Pell Grant determinations made for academic years beginning on or after July 1, 2026, the foreign income as described in Section 480B5 of the student and the student's spouse, if applicable. 2, sunset Section 401B1D of the Higher Education Act of 1965, 20 U.S.C. 1070A(b)(1)D is amended, A, by striking a student and inserting for each academic year beginning before July 1, 2026, a student, and B, by inserting as in effect for such academic year after Section 479A(b)(1)B)V. 3, conforming amendments. A, in general, Section 479A(b)(1)B of the Higher Education Act of 1965, 20 U.S.C. 1087 TTB1B is amended, 1, by striking Clause 5, and 2, by redesignating Clauses 6 and 7 as Clauses 5 and 6, respectively. B, effective date. This amendment made by subparagraph A shall take effect on July 1, 2026. B, federal Pell Grant ineligibility due to a high student aid index. 1, in general, Section 401B1 of the Higher Education Act of 1965, 20 U.S.C. 1070A(b)(1) is amended by adding at the end the following. F, ineligibility of students with a high student aid index. Notwithstanding subparagraphs A through E, a student shall not be eligible for a federal Pell Grant under this subsection for an academic year in which the student has a student aid index that equals or exceeds twice the amount of the total maximum federal Pell Grant for such academic year. 2, effective date. The amendment made by paragraph 1 shall take effect on July 1, 2026. Section 83002, Workforce Pell Grants. A, in general, Section 401 of the Higher Education Act of 1965, 20 U.S.C. 1070A is amended by adding at the end the following. K, Workforce Pell Grant Program. 1, in general, for the award year beginning on July 1, 2026, and each subsequent award year, the Secretary shall award grants to be known as Workforce Pell Grants to eligible students under paragraph 2 in accordance with this subsection. 2, eligible students. To be eligible to receive a Workforce Pell Grant under this subsection for any period of enrollment, a student shall meet the eligibility requirements for a federal Pell Grant under this section except that the student A shall be enrolled or accepted for enrollment in an eligible program under Section 481B3 hereinafter referred to as an ineligible workforce program, and B, may not, 1, be enrolled or accepted for enrollment in a program of study that leads to a graduate credential, or 2, have attained such a credential. 3, terms and conditions of awards. The Secretary shall award Workforce Pell Grants under this subsection in the same manner and with the same terms and conditions as the Secretary awards federal Pell Grants under this section, except that A, each use of the term eligible program, except in subsection B9A, shall be substituted by eligible workforce program under Section 481B3. B, the provisions of subsection D3 shall not be applicable to eligible workforce programs. And C, a student who is eligible for a grant equal to or less than the amount of the minimum federal Pell Grant because of the eligible workforce program in which the student is enrolled or accepted for enrollment is less than an academic year in hours of instructions or weeks of duration may still be eligible for a Workforce Pell Grant in an amount that is prorated based on the length of the program. 4, prevention of double benefits. No eligible student described in paragraph 2 may concurrently receive a grant under both this subsection and A, subsection B, or B, subsection C. 5, duration limit. Any period of study covered by a Workforce Pell Grant awarded under this subsection may be included in determining a student's duration limit under subsection D5. Program eligibility for Workforce Pell Grants. Section 481B of the Higher Education Act of 1965, 20 U.S.C. 1088B is amended, 1, by redesignating paragraphs 3 and 4 as paragraphs 4 and 5 respectively, and 2, by inserting after paragraph 2 the following. 3A, a program is an eligible program for purposes of the Workforce Pell Grant Program under Section 401K only if, 1, it is a program of at least 150 clock hours of instruction, but less than 600 clock hours of instruction, or an equivalent number of credit hours offered by an eligible institution during a minimum of 8 weeks, but less than 15 weeks. 2, it is not offered as a correspondence course as defined in 600.2 of Title 34 Code of Federal Regulations as in effect on July 1, 2021. 3, the governor of a state, after consultation with the state board, determines that the program, 1, provides an education aligned with the requirements of high skill, high wage as identified by the state pursuant to Section 122 of the Carl D. Perkins Career and Technical Education Act, 20 U.S.C. 2342, or in-demand industry sectors or occupations. 2, meets the hiring requirements of potential employers in the sectors or occupations described in subclause 1. 3, either AA, leads to a recognized post-secondary credential that is stackable and portable across more than one employer, or BB, with respect to students enrolled in the program. AA, prepares such students for employment in an occupation for which there is only one recognized post-secondary credential, and BB requires such students with such a credential upon completion of such program. And 4, prepares students to pursue one or more certificate or degree programs at one or more institutions of higher education, which may include the eligible institution providing the program, including by ensuring AA that a student upon completion of the program and enrollment in such a related certificate or degree program will receive academic credit for the Workforce Pell program that will be accepted toward meeting such certificate or degree program requirements, and BB, the acceptability of such credit toward meeting such certificate or degree program requirements, and 4, after the governor of such state makes the determination that the program meets the requirements under Clause 3, the Secretary determines that 1, the program has been offered by the eligible institution for not less than 1 year prior to the date on which the Secretary makes the determination under this clause. 2, for each award year, the program has a verified completion rate of at least 70% with 150% of the normal time for completion. 3, for each award year, the program has a verified job placement rate of at least 70% measured 180 days after completion. And 4, for each award year, the total amount of the published tuition and fees of the program for such year is an amount that does not exceed the value-added earnings of students who received federal financial aid under this title and who completed the program 3 years prior to the award year. As such earnings are determined by calculating the difference between AA, the median earnings of such students as adjusted by the state and metropolitan area regional price parities of the Bureau of Economic Analysis based on the location of such program, and BB, 150% of the poverty line applicable to a single individual as determined under Section 6732 of the Community Services Block Grant Act, 42 U.S.C. 99022 for such year. B, in this paragraph, 1, the term eligible institution means an eligible institution for purposes of Section 401. 2, the term governor means the chief executive of a state. 3, the terms in-demand industry sector or occupation, recognized post-secondary credential, and state board have the meanings given such terms in Section 3 of the Workforce Innovation and Opportunity Act. C, effective date, applicability. The amendments made by this section shall take effect on July 1, 2026 and shall apply with respect to award year 2026 through 2027 and each succeeding award year. Section 83003, Pell shortfall. Section 401B7A3 of the Higher Education Act of 1965, 20 U.S.C. 1070A B7A3 is amended by striking $2,170,000,000 and inserting $12,670,000,000. Section 83004, Federal Pell Grant exclusion relating to other grant aid. Section 401D of the Higher Education Act of 1965, 20 U.S.C. 1070AD is amended by adding at the end the following. 6, exclusion. Beginning on July 1, 2026, and notwithstanding this subsection or subsection B, a student shall not be eligible for a federal Pell Grant under subsection B during any period for which the student receives grant aid from non-federal sources, including states, institutions of higher education, or private sources, in an amount that equals or exceeds the student's cost of attendance for such period. Subtitle E, accountability, Section 84001, ineligibility based on low earning outcomes. Section 454 of the Higher Education Act of 1965, 20 U.S.C. 1087D is amended 1 in subsection A. A, In paragraph 5, by striking "and" after the semicolon. B, by redesignating paragraph 6 as paragraph 7. And C, by inserting after paragraph 5 the following. 6, provide assurances that beginning on July 1, 2026, the institution will comply with all requirements of subsection C and 2 in subsection B2 by striking "and 6" and inserting 6 and 7. 3, by redesignating subsection C as subsection D, and 4, by inserting after subsection B the following. C, ineligibility for certain programs based on low earning outcomes. 1, in general, notwithstanding section 481B, an institution of higher education subject to this subsection shall not use funds under this part for student enrollment in an educational program offered by the institution that is described in paragraph 2. 2, low earning outcome programs described. An educational program at an institution is described in this paragraph if the program awards an undergraduate degree, graduate or professional degree, or graduate certificate for which the median earnings, as determined by the Secretary of the programmatic cohort of students who received funds under this title for enrollment in such program, who completed such program during the academic year, that is 4 years before the year of the determination, who are not enrolled in any institutions of higher education and who are working, are for not less than 2 or 3 years of the 3 years immediately preceding the date of the determination, less than the median earnings of a working adult described in paragraph 3 for the corresponding year. 3, calculation of median earnings. A, working adult. For purposes of applying paragraph 2 to an educational program at an institution, a working adult described in this paragraph is a working adult who, for the corresponding year, 1, is aged 25 to 34, 2, is not enrolled in an institution of higher education, and 3, 1, in the case of a determination made for an educational program that awards a baccalaureate or lesser degree, has only a high school diploma or its recognized equivalent, or 2, in the case of a determination made for a graduate or professional program, has only a baccalaureate degree. B, source of data. For purposes of applying paragraph 2 to an educational program at an institution, the median earnings of a working adult as described in subparagraph A shall be based on data from the Bureau of the Census, 1, with respect to an educational program that awards a baccalaureate or lesser degree, 1, for the state in which the institution is located, or 2, if fewer than 50% of the students enrolled in the institution reside in the state where the institution is located for the entire United States, and 2, with respect to an educational program that is a graduate or professional program, 1, for the lowest median earnings of AA, a working adult in the state in which the institution is located, BB, a working adult in the same field of study as determined by the Secretary, such as by using the 2-digit CIP code in the state in which the institution is located, and CC, a working adult in the same field of study as so determined in the entire United States, or 2, if fewer than 50% of the students enrolled in the institution reside in the state where the institution is located for the lower median earnings of AA, or working adult in the entire United States, or BB, a working adult in the same field of study as so determined in the entire United States. 4, small programmatic cohorts. For any year in which the programmatic cohort described in paragraph 2 for an educational program of an institution is fewer than 30 individuals, the Secretary shall A, first, aggregate additional years of programmatic data in order to achieve a cohort of at least 30 individuals, and B, second, in cases in which the cohort, including the individuals added under subparagraph A, is still fewer than 30 individuals, aggregate additional cohort years of programmatic data for educational programs of equivalent length in order to achieve a cohort of at least 30 individuals. 5, appeals process. An educational program shall not lose eligibility under this subsection unless the institution has had the opportunity to appeal the programmatic median earnings of students working and not enrolled determination under paragraph 2 through a process established by the Secretary. During such appeal, the Secretary may permit the educational program to continue to participate in the program under this part. 6, notice to students. A, in general, if an educational program of an institution of higher education subject to this subsection does not meet the cohort median earnings requirements as described in paragraph 2 for 1 year during the applicable covered period, but has not yet failed to meet such requirements for 2 years during such covered period, the institution shall promptly inform each student enrolled in the educational program of the eligible program's low cohort meeting earnings, and that the educational program is at risk of losing its eligibility for funds under this part. B, covered period. In this paragraph, the term covered period means the period of the 3 years immediately preceding the date of a determination made under paragraph 2. 7, regaining programmatic eligibility. The Secretary shall establish a process by which an institution of higher education has an educational program that has lost eligibility under this subsection may, after a period of not less than 2 years of such programs ineligibility, apply to regain such eligibility, subject to the requirements established by the Secretary that further the purpose of this subsection. Subtitle F, Regulatory Relief. Section 85001, delay of the rule relating to borrower defense to repayment. A, delay. Beginning at the date of enactment of this section for loans that first originated before July 1, 2035, the provisions of Subpart D of Part 685 of Title 34 Code of Federal Regulations relating to borrower defense to repayment, as added or amended by the final regulations published by the Department of Education on November 1, 2022, entitled Institutional Eligibility under the Higher Education Act of 1965 as amended, Student Assistance General Provisions, Federal Perkins Loan Programs, Federal Family Education Loan Programs, and William D. Ford Federal Loan Program, 87 Fed Reg 65904 shall not be in effect. B, effect. Beginning on the date of enactment of this section with respect to loans that first originate before July 1, 2035, any regulations relating to borrower defense to repayment that took effect on July 1, 2020 are restored and revived as such regulations were in effect on such date. Section 85002, delay of ruling related to closed school discharges. A, delay. Beginning on the date of enactment of this section for loans that first originate before July 1, 2035, the provisions of sections 674.33G, 682.402D, and 685.214 of Title 34 Code of Federal Regulations related to closed school discharges, as added or amended by the federal regulations published by the Department of Education on November 1, 2022, entitled Institutional Eligibility under the Higher Education Act of 1965 as amended, Student Assistance General Provisions, Federal Perkins Loan Program, Federal Family Education Loan Program, and William D. Ford Federal Direct Loan Program, 87 Fed Reg 65904 shall not be in effect. B, effect. Beginning on the date of enactment of this section with respect to loans that first originate before July 1, 2035, the portions of the Code of Federal Regulations described in subsection A and amended by the final regulations described in subsection A shall be in effect as of if the amendments made by such federal regulations had not been made. Subtitle G, Limitation on Authority. Section 86001, Limitation on proposing or issuing regulations and executive actions. Part G of Title IV of the Higher Education Act of 1965, 20 U.S.C. 1088 et sec is amended by inserting after Section 492 the following. Section 492A, Limitation on proposing or issuing regulations and executive actions. A, proposed or final regulations and executive actions. Beginning on the date of enactment of this section, the Secretary may not issue a proposed regulation, final regulation, or executive action to implement this title if the Secretary determines that the regulation or executive action will increase the subsidy cost, as cost is defined in Section 502 of the Federal Credit Reform Act of 1990, 2 U.S.C. 661A of a loan program under this title by more than $100 million. B, relationship to other requirements. The requirements of subsection A shall not be construed to affect any other cost analysis required under any source of law for a regulation implementing this title. Subtitle H, Garden of Heroes, Section 87001, Garden of Heroes. In addition to amounts otherwise available, they are appropriated to the National Endowment for the Humanities for fiscal year 2025 out of any money of the Treasury not otherwise appropriated to remain available through fiscal year 2028, $40 million for the procurement of statues as described by an Executive Order 13934, 85 Fed Reg 41165, relating to building and rebuilding monuments to American heroes, Executive Order 13978, 86 Fed Reg 6809, relating to building the National Garden of American Heroes, and Executive Order 14189, 90 Fed Reg 8849, relating to celebrating America's birthday. Subtitle 1, Office of Refugee Resettlement, Section 88001, Potential Sponsor Vetting for Unaccompanied Alien Children Appropriation. A, appropriation in addition to amounts otherwise available, there is appropriated to the Office of Refugee Resettlement for fiscal year 2025 out of any money of the Treasury not otherwise appropriated, $300 million to remain available until September 30, 2028 for the purposes described in subsection B. B, use of funds. The funds made available under subsection A may only be used for the Office of Refugee Resettlement to support costs associated with 1, background checks on potential sponsors, which shall include A, the name of the potential sponsor and of all adult residents of the potential sponsor's household, B, the Social Security number or taxpayer identification number of the potential sponsor and of all adult residents of the potential sponsor's household, C, the date of birth of the potential sponsor and of all adult residents of the potential sponsor's household, D, the validated location of the residence at which the unaccompanied alien child will be placed, E, an in-person or virtual interview with and suitability study concerning the potential sponsor and all adult residents of the potential sponsor's household, F, contact information for the potential sponsor and for all adult residents of the potential sponsor's household, and G, the results of all background and criminal record checks for the potential sponsor and for all adult residents of the potential sponsor's household, which shall include at a minimum an investigation of the public records sex offender registry, a public records background check, and a national criminal history background check on fingerprints. 2, home studies of potential sponsors of unaccompanied alien children. 3, determining whether an unaccompanied alien child possesses a danger to self or others by conducting an examination of the unaccompanied alien child for gang-related tattoos and other gang-related markings and coverings. Such tattoos or markings while the child is in the care of the Office of Refugee Resettlement. 4, data systems improvement and sharing that supports the health, safety, and well-being of unaccompanied alien children by determining the appropriateness of potential sponsors of unaccompanied alien children and of adults residing in the household of the potential sponsor, and by assisting with the identification and investigation of child labor, exploitation, and child trafficking. And 5, coordinating and communicating with state child welfare agencies regarding the placement of unaccompanied alien children in such states by the Office of Refugee Settlement. C, definitions in this section. 1, potential sponsor. The term potential sponsor means an individual or entity who applies for the custody of an unaccompanied alien child. 2, unaccompanied alien child. This term, unaccompanied alien child, has the meaning given in such term in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G. Title 9, Committee on Homeland Security and Governmental Affairs, Subtitle A, Homeland Security Provisions, Section 90001, Border Infrastructure and Wall System. In addition to amounts otherwise available, there is appropriated to the Commissioner of U.S. Customs and Border Protection for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30, 2029, $46,555,000,000 for necessary expenses related to the following elements of the border infrastructure and wall system. 1, construction, installation, or improvement of new or replacement primary waterborne and secondary barriers. 2, access roads. 3, barrier system attributes, including cameras, lights, sensors, and other detection technology. 4, any work necessary to prepare the ground at or near the border to allow U.S. Customs and Border Protection to conduct its operations, including the construction and maintenance of the barrier system. Section 90002, U.S. Customs and Border Protection personnel, fleet vehicles, and facilities. In general, in addition to amounts otherwise available, there was appropriated to the Commissioner of U.S. Customs and Border Protection for fiscal year 2025 out of any money of the Treasury not otherwise appropriated the following. Personnel, $4,100,000,000 to remain available until September 30, 2029 to hire and train additional Border Patrol agents, Office of Field Operations Officers, Air and Marine agents, rehired annuitants, and U.S. Customs and Border Protection field support personnel. 2, retention, hiring, and performance bonuses, $2,052,630,000 to remain available until September 30, 2029 to provide recruitment bonuses, performance awards, or annual retention bonuses to eligible Border Patrol agents, Office of Field Operations Officers, and Air and Marine agents. 3, vehicles, $855 million to remain available until September 30, 2029 for the repair of existing patrol units and the lease or acquisition of additional patrol units. 4, facilities, $5 billion for necessary expenses relating to lease acquisition, construction, design, or improvement of facilities and checkpoints owned, leased, or operated by the U.S. Customs and Border Protection. B, restriction. None of the funds made available by subsection A may be used to recruit, hire, or train personnel for the duties of processing coordinators after October 31, 2028. Section 90003, detention capacity A in general. In addition to any amounts otherwise appropriated, there is appropriated to U.S. Immigration
and custom enforcement for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029. $45 billion for single adult alien detention capacity and family residential center capacity. B, duration and standards. Aliens may be detained at family residential centers as described in subsection A pending a decision under the Immigration and Nationality Act 8 U.S.C. 1101 et sec. On whether the aliens are to be removed from the United States and if such aliens are ordered removed from the United States until such aliens are removed. The detention standards for the single adult detention capacities described in subsection A shall be set in the discretion of the Secretary of Homeland Security consistent with applicable law. C, definition of family residential center. In this section, the term family residential center means a facility used by the Department of Homeland Security to detain family units of aliens, including alien children who are not unaccompanied alien children, as defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, who are encountered or apprehended by the Department of Homeland Security regardless whether the facility is licensed by the state or a political subdivision of the state in which the facility is located. Sec 9004, border security technology screening. A, in general, in addition to amounts otherwise available, there is appropriated to the Commission of U.S. Customs and Border Protection for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, $6,168,000,000 for the following. 1, procurement and integration of new non-intrusive inspection equipment and associated civil works, including artificial intelligence, machine learning, and other innovative technologies, as well as other mission support to combat the entry or exit of illicit narcotics at ports of entry and along the southwest, northern, and maritime borders. 2, air and marine operations, upgrading and procurement of new platforms for rapid air marine response capabilities. 3, upgrades and procurement of border surveillance technologies along the southwest, northern, and maritime borders. 4, necessary expenses, including the deployment of technology relating to the biometric entry and exit system under Section 7208 of the Intelligence Reform and Terrorism Prevention Act of 2004, 8 U.S.C. 1365b. 5, screening persons entering or exiting the United States. 6, initial screenings of unaccompanied alien children as defined in Section 462G of the Homeland Security Act of 2002, 6 U.S.C. 279G, consistent with the William Wilberforce Trafficking Victims Protection Reauthorization Act of 2008, Public Law 110457, 122, Stat 5044. 7, enhancing border security by combating drug trafficking, including fentanyl and its precursor chemicals, at the southwest, northern, and maritime borders. 8, commemorating efforts and events relating to border security. B, restrictions. None of the funds made available under subsection A may be used for the procurement or deployment of surveillance towers along the southwest border and northern border that have not been tested and accepted by U.S. Customs and Border Protection to deliver autonomous capabilities. C, definition of autonomous. In this section, with respect to capabilities, the term autonomous means a system designed to apply artificial intelligence, machine learning, computer vision, or other algorithms to accurately detect, identify, classify, and track items of interest in real time, such that the system can make operational adjustments without the active engagement of personnel or continuous human command or control. Sec 90005, state and local assistance. A, state Homeland Security grant programs, 1 in general. In addition to amounts otherwise available, there is appropriated to the administrator of the Federal Emergency Management Agency for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to remain available until September 30th, 2029, to be administered under the state Homeland Security grant program authorized under Section 2004 of the Homeland Security Act of 2002, 6 U.S.C. 605, to enhance state, local, and tribal security through grants, contracts, cooperative agreements, and other activities. A, $500 million for state and local capabilities to detect, identify, track, or monitor threats from unmanned aircraft systems, as such term is defined in Section 44801 of Title 49 United States Code, consistent with Titles 18 and 49 of the United States Code. B, $625 million for security and other costs relating to the 2026 FIFA World Cup. C, $1 billion for security planning and other costs related to the 2028 Olympics, and D, $450 million for the Operation Stone Garden grant program. 2, terms and conditions. None of the funds made available under subparagraph B or C or paragraph 1 shall be subject to the requirements of Section 2004E1 or Section 2008A12 of the Homeland Security Act of 2002, 6 U.S.C. 605E1, 609A12. B, State Border Security Reinforcement Fund. 1, establishment. There is established in the Department of Homeland Security a fund to be known as the State Border Security Reinforcement Fund. 2, purpose. The Secretary of Homeland Security shall use amounts appropriate or otherwise made available for the fund for grants to eligible states and units of local government for any of the following purposes. A, construction or installation of a border wall, border fencing or other barrier or buoys along the southern border of the United States, which may include planning, procurement of materials, and personal costs related to such construction or installation. B, any work necessary to prepare the ground at or near land borders to allow construction and maintenance of a border wall or other barrier fencing. C, detection and interdiction of illicit substances and aliens who have unlawfully entered the United States and have committed a crime under federal, state, or local law, and transfer or referral of such aliens to the Department of Homeland Security as provided by law. D, relocation of aliens who are unlawfully present in the United States from small population centers to other domestic locations. 3, appropriation. In addition to amounts otherwise available for the purposes described in paragraph 2, there is appropriated for fiscal year 2025 out of any money in the Treasury not otherwise appropriated to the Department of Homeland Security for the State Border Security Reinforcement Fund established by paragraph 1, $10 billion to remain available until September 30th, 2034 for qualified expenses for such purposes. 4, eligibility. The Secretary of Homeland Security may provide grants from the fund established by paragraph 1 to state agencies and units of local governments for expenditures made for completed, ongoing, or new activities in accordance with law that occurred on or after January 20th, 2021. 5, application. Each state desiring to apply for a grant under this subsection shall submit an application to the Secretary containing such information in support of the application as the Secretary may require. The Secretary shall require that each state include in its application the purposes for which the state seeks the funds and a description of how the state plans to allocate the funds. The Secretary shall begin to accept applications not later than 90 days after the date of the enactment of this act. 6, terms and conditions. Nothing in this subsection shall authorize any state or local government to exercise immigration or border security authorities reserved exclusively to the federal government under the Immigration and Nationality Act, 8 U.S.C. 1101 Exet, or the Homeland Security Act of 2002, 6 U.S.C. 101 Exet. The Federal Emergency Management Agency may use not more than 1% of the funds made available under this subsection for the purpose of administering grants provided for in this section. Sec 90006, Presidential Residence Protection. A, in general. In addition to amounts otherwise available, there is appropriated to the Administrator of the Federal Emergency Management Agency for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $300 million to remain available until September 30th, 2029 for the reimbursement of extraordinary law enforcement personnel costs for protection activities directly and demonstrably associated with any residence of the President's designated pursuant to Section 3 or 4 of the Presidential Protection Assistance Act of 1976, Public Law 94524, 18 U.S.C. 3056 note, to be secured by the United States Secret Service. B, availability. Funds appropriated under this section shall be available only for costs that a state or local agency, 1, incurred or incurs on or after July 1st, 2024. 2, demonstrates to the administration of the Federal Emergency Management Agency as being A, in excess of typical law enforcement operational costs, B, directly attributable to the provision of protection described in this section, and C, associated with a non-governmental property designated pursuant to Section 3 or 4 of the Presidential Protection Assistance Act of 1976, Public Law 94524, 18 U.S.C. 3056 note, to be secured by the United States Secret Service, and 3, certifies to the Administrator as compensating protection activities requested by the United States Secret Service. C, terms and conditions. The Federal Emergency Management Agency may use not more than 3% of the funds made available under this section for the purpose of administering grants provided for in this section. Sec 90007, Department of Homeland Security Appropriations for Border Support. In addition to amounts otherwise available, there are appropriated to the Secretary of Homeland Security for fiscal year 2025 out of any money in the Treasury not otherwise appropriated, $10 billion to remain available until September 30th, 2029 for reimbursement of costs incurred in undertaking activities in support of the Department of Homeland Security's mission to safeguard the borders of the United States. Subtitle B, Governmental Affairs Provisions. Sec 90101, FEHB Improvements. A, short title. This section may be cited as the FEHB Protection Act of 2025. B, definitions in this section. 1, director. The term director means director of the Office of Personnel Management. 2, health benefit plans. Member of family, the term health benefits plan and member of family have the meanings given those terms in Section 8901 of Title V United States Code. 3, open season. The term open season means an open season described in Section 390.301F of Title V Code of Federal Regulations or any successor regulation. 4, program. The term program means the health insurance programs carried out under Chapter 89 of Title V United States Code, including the program carried out under Section 8903C of that title. 5, qualifying life event. The term qualifying life event has the meaning given the term in Section 892.101 of Title V Code of Federal Regulations or any successor regulation.